Hello, all of you. Uh, Good morning. Am I audible now? Is the screen visible? Can you please respond in the chat, the students who are watching? All good? All right, perfect. Okay, so let's start the session. Okay, when there was some technical snag in the beginning, that's the reason why I could not start at sharp 9. I was here at sharp 9, but as I was starting, there was some technical issue. Because of that, I was not able to go live. But yeah, everything seems fine now. Let's start our session. All right, fine. So as we discussed yesterday, today we are going to focus on first exemptions and then input tax credit. Let's start with exemptions. So as you all know, exemptions is actually quite a big chapter. Okay? It's a huge chapter with a lot of topics coming into the picture, and I always tell students not to skip this chapter. This chapter has two levels of importance. The first level of importance is where in the main question they ask you to compute the GST payable. Yesterday we were discussing that, right? Because yesterday I told you we were discussing about this criteria here. To understand whether a supply is taxable or not, you should have a clear idea whether the supply is exempt or not. For that, you should have an idea. You should actually look at all the exceptions. Okay, fine. Now, the next thing that I want you to understand is it's not just for that purpose. There can be a specific question where they specifically ask you whether a transaction is exempt or taxable. So it can happen both ways. So for both these purposes, you should have a clear idea what are the exceptions. Okay, so I'm going to start with this chapter. Let's look at it. First, let's start with exemption related to charitable institutions. So before I start with that, I hope you all know this chapter, basically this chapter called exemptions. You have to have an idea that exemptions in GST can be divided into three. Right? The first one is nil rated supply. Second one is supply exempted by notification. And the last one is non-taxable supply. We have three. Nil rate supply, exempted by notification, non-taxable supply. If you look at these three, actually nil rate supply, there is no much importance for exam. There's not too many nil rate supplies for you to study for exam. Non-taxable supply, we are already done with that. We have 8 supplies, right? We discussed yesterday. Okay. This chapter, we are predominantly focusing on the supplies exempted by notification. Okay. Now, supplies exempted by notification. The section is section 11 of CGST Act, and they have exempted both goods and service. Goods as well as service is basically exempted here. All right. So, should you study both? No. Goods are not applicable for your CA inter exam. Okay. Even for CA final exam, you need not study goods. We only have to focus on the services exempted by notification. That's our predominant activity. Okay. So far you are all clear. Let's start with the first service. The first service that you usually study is, like, I am just categorizing into different headings for easy understanding. The first thing is charitable and religious activities. Okay. If time permits, yes. As somebody is asking me about the other topics of marathon, if time permits, we can see. Else, these are the most important concepts we will be covering. Okay, fine. So, under charitable related activity, let me explain to you how you should study this. First of all, you should understand that charitable exemption. So, exemption related to charity. I'm going to give you quick tips how to study this. Okay. See, we have an entity. And this entity is doing something. All right. So, to understand whether this transaction will get an exemption related to charitable activity, first you have to see this entity should be registered under section 12AA or AB of Income Tax Act. That's the first criteria. The second thing, the activity that they do should be a notified charitable activity. They cannot come and do whatever they want. It should be a notified charitable activity. If these two conditions are cumulatively satisfied, we can say that the supply is exempted. That is a basic concept. So please keep that in your mind. You have two things to look at. First, the entity must be registered under 12A or AB. And the second thing is the activity must be a notified charitable activity, not any random activity. Okay, so the only remaining question is, what are the notified charitable activity? For that, whichever book you are following. So yesterday in the marathon, I had already told you that you can either follow my study material, my students who are attending this class, or you can actually go follow ICA study material or any other study material that you have. Just make sure it's amended to the latest provisions. Okay, so I usually provide a chart talking about which are the notified charitable activity. So I want you to just quickly read through the notified charitable activity. I'm not going to explain this one by one, just have a quick read. This is the first set. Please read this. All good? And this set. I think you're done with that. Okay, so only if these notified activities are being carried out, only then that can the charitable association or the entity get any exemption. Okay, now here once for examination they had asked that for this particular point, the person's over the age of 65 years is residing in rural area. They had once asked urban area was asked for the examination. Exemption is applicable only if it's a rural area. Okay, so I hope you're done with that. Okay, the next point, all right, is training in recreational activities. So I'm talking about training in recreational training. Okay, this training, you have to understand that there are two types of trainings that we discuss about. The first is art or culture, which means some artistic or cultural activities being trained. The second one is basically sports. Okay, when do we get the exemption? In the case of art or culture, if the person giving the training is an individual, it's going to be exempted. Okay, so individual is going to be exempted. All other cases is going to be taxable. Easy. Okay, what about sports? In the case of sports, we have to look at who is providing the training. If the person providing the training is actually an entity registered under 12A or AB, it's going to be exempted. All other cases going to be taxable. This is an entry that you have to study. This is important. Okay, so recreational training, quick revision. If the training is carried out by an individual, first of all, you have to look at what training, right? It can be art or culture or sports. If it's art or culture, see if an individual is providing the training. If it's an individual, it's going to be completely exempted. Other cases going to be taxable. In the case of sports, it does not matter the person is individual or not. What we're looking at is whether the supplier is registered under 12A or not. If they are registered under 12A or AB, it's going to be completely exempted. All other cases going to be completely taxable. Easy. Okay, done. The next thing you have to look at is religious service. Okay, so religious service, we discuss about two types of religious service. One is religious ceremonies or pujas. Okay, religious ceremonies or pujas. Okay, so what do I have to talk about there? religious ceremonies or puja, it's very easy. It's going to be completely exempted. There is no criteria on the amount being spent. There is no criteria who is providing the service. Nothing. It's going to be completely exempted. Religious ceremonies or pujas. Now, the other thing that I have to talk about religious services basically, where they are renting out religious premises, which means there's a religious place and some premise of the religious place is being rented out. There is exemption, but there are multiple conditions to be satisfied. The first condition is the entity that is carrying out the operations related to the religious place, the person or the entity in charge of the religious place, they must be registered under 12AA or AB or 1023 of Income Tax Act. Okay, this is the first condition. Under 12AA or 1023 of Income Tax Act. Make sure that is completely done. Now, the next thing is, depending upon what they are renting out, there are monetary exemptions. Okay, so what are the monetary exemptions? The first exemption is in the case of rooms. In the case of rooms, the cutoff is ₹1,000 per day, which means per day, if the room rent is 1,000 or more, it is going to be taxable. So keep that in mind. 1,000 is taxable. 1,000 or more is taxable. Less than 1,000, exempted. Okay. Now, other places like Kalyana Mandapams, etc. In the case of Kalyana Mandapams, etc., the limit is ₹10,000 per day. Limit is 10,000 per day. Correct, 10,000 is taxable. Keep that in mind. More than 10,000 is taxable, of course. Less than 10,000 is going to be exempted. Okay. Now, 1 is done, 2 is done. The last point is basically shops or commercial space. So, religious place might be having so much commercial places under that. If they are renting that out, the limit is going to be ₹10,000 per day. The limit is 10,000 per day. More than 10,000 is going to be taxable. Correct, 10,000 is also taxable. This is the criteria. I'll just quickly show the chart related to this. You can have a quick revision. Okay. Just see if this makes sense. Take a moment, quickly revise. No. If any person is doing, if I am providing some religious ceremony to you, it's going to be completely exempted. That's the concept. It does not matter who the recipient is. Okay. Then let's again continue. The next exemption related to religious pilgrimage. Exemption related to religious pilgrimage. So this is a very easy entry. Just have a quick study or a quick revision for this topic. So when we talk about religious pilgrimage, there are two types of religious pilgrimage. Only those two are exempted. One is the Hajj Yatra. The next one is Kailasa Yatra. Okay, so these two religious yatras are actually conducted by these two entities. Only those two transactions are going to be completely exempted. Everything else is going to be taxable. Only those two yatras are exempted. If you look over, you can clearly see that which yatras are covered over here. Okay, fine. That's a very easy tender to learn. So that's all about religious and charitable associations entries. Okay, so all entries related to religious, religion or charity is basically done. Okay, have a quick revision, a very easy entry to remember, study it. Correct? Okay, fine. Now, the next point that we are going to look at is basically agriculture service. Okay, let's see when the marathon ends. Based on the time, we will look into it. Okay, fine. Now, the next one is exemption related to agricultural activities. Exemptions related to agricultural activities. So agriculture also has certain exemptions. What? So this I usually give students a easy technique to learn. Basically, first of all, you have to have a clear idea what is meant by agricultural produce. Okay, you have to have a clear idea what is meant by agricultural produce. Just a second. Give me a moment. Okay, yeah. So the technique is just study what is meant by agricultural produce. Okay, fine. So if you're asking me what do you mean by agricultural produce, I'll just show it on the screen. Okay, you can quickly read the definition of agricultural produce. Even you already have this study material, or you can quickly read. This is the definition of agricultural produce. Yeah, Oscar, they will mention. Okay, so this is the definition of agricultural produce. So basically these are products related to agriculture, right? So if at all you have an agriculture produce, okay, the basic way to remember this entry is any service that an agriculturist, basically a farmer, receives with respect to the agriculture produce is going to be exempted. See, so for example, if you look over here, I'm showing you two products. Okay, you can see an apple and an apple juice. So very clearly we can understand that apple is an agricultural produce. Apple juice is not an agricultural produce, which means any service that an agriculturist might do or receive with respect to agriculture produce is going to be exempted. But any service that an agriculturist must receive with respect to an agriculture produce, but the procedure is after the produce, but moving towards product, the next process product. Okay, for example, let's say I'm a farmer. I'm getting a service related to harvesting my fruits. It's related to agriculture produce is going to be exempted. But any service that I receive after that, which means any service that I receive after agriculture produce, where the product is moving towards a non-agriculture produce, a processed food, all those are going to be taxable. This is the primary thing you should remember about agriculture produce. If you have this idea, it's relatively easy to learn. Okay, so I'm just going to quickly mark the entries and give. I'm not going to discuss one by one. Not part of our revision. We have already done all the detailed discussion in class with sufficient number of examples. This is a quick revision. Okay, so the first case is any service related to agriculture produce by way of all these activities. Okay, fine. The next is I'm going to show you a couple of examples. Supply of farm labor. So all these services actually might be received by an agriculturist while he is producing the agriculture produce. These processes will not make agriculture produce non-agriculture produce. That's the only thing you have to remember. So with that in your mind, just have a quick read about agriculture related services. I'm not going to go one by one because it's not part of our revision strategy, but I would suggest have a quick read. Just one time read is enough. Okay, you'll be able to wrap it up. All right, fine. Now here, please understand that there are some points that you should keep in your mind. For example, when we talk about agriculture, this is a very common thing you have to keep in your mind. Sugarcane is treated as agriculture produce. But please remember that sugar or jaggery is not agriculture produce. Okay, because you might be learning an entry called warehousing of agriculture produce is exempted. warehousing of agriculture produce is exempted. When you study that entry, please keep in your mind that if you are warehousing sugarcane, it is exempted. You are warehousing sugar, it is taxable. Okay, so those minute points just keep in your mind. Okay, fine. Now, the next point you have to keep in your mind is regarding paddy. Okay, paddy. Shops for month. I actually mentioned month, right? Did I mention day? Oh yeah, I mentioned day. Sorry, thank you. Thank you for correcting me. Okay, for example, when we are talking about the religious preschool religious places, I actually meant rooms 1,000 and Kalyana Mandapam 10,000. Shops is 10,000 per month. Actually, when I showed you the chart, you might have read it properly. There is a mistake from my part. Good point. It's 10,000 per month. Correct. Okay, when I showed you the chart, you might have seen that. Okay, done. Sorry for that mistake. I hope it's clear to you guys. All right. Now continuing. Yeah. So, yeah, when we're talking about rice, please keep in your mind that paddy is an agriculture produce. Paddy is an agriculture produce, but rice is not treated as agriculture produce. So what happens is the procedure by which the paddy is milled into rice, it's actually going to be taxable. It's a quite commonly tested point. The procedure by which the paddy is milled into rice is going to be taxable. Good, fine. Now there is one more thing. Just a couple of entries back, I told you warehousing of paddy is basically exempted, right? Because paddy is a warehouse. Paddy is a agriculture produce. So if you are warehousing agriculture produce, it's going to be completely exempted. So if you are warehousing paddy, it's going to be exempted. So the question is, what about your warehousing rice? Rice is not agriculture produce, but keep in mind that rice has a separate entry for warehousing. So it's going to be exempted. Okay, so that's the point you have to keep in your mind. Just make sure you have a thorough reading of agriculture produce. I'm not going to go line by line over here because there is not much, logical aspects to study over there. Just look at the points. So agriculture produce is something you have to check. All right, done. The next heading that I'm going towards is education. This is actually very important. Education service is actually important. It's slightly tricky as well. Okay, now when you study education or service related to education, the predominant thing that you should be studying is what do you mean by educational institutions. That is your main concept. What do you mean by education institution? Okay, why are we studying education institution? Because exemption related to education has two parts. One is services provided by education institution. When we say services provided by education institution, I am talking about output services of education institution. There are many services exempted. We'll see. All right. Once you learn that, the next thing that you should learn is services provided to education institution, which means those services are input services. Okay. So you have to study both these points to thoroughly understand exemption related to education, by and to. Okay. Now, before moving on to by and to, the first thing you have to learn is what do you mean by education institution? So education institution can usually be divided into three. Okay, the classification is three. Okay, the first one is preschool up to higher secondary school, which means I'm going to simply put it at schools. Okay, preschool up to higher secondary school. What is the second type of education institution? An institution that provides education as a part of curriculum for obtaining a qualification recognized by law. All right. So basically, what did I say? They have a curriculum. They provide a qualification. It is recognized by law. Simply put, colleges. Okay. Colleges, not just colleges. We can even actually talk about our ICA, right? Our ICA is also an educational institution. When we talk about this particular point, ICA is also going to be an educational institution. Okay, so in the first case, schools, I talked schools, preschool, etc. come over here. Here, basically, all the colleges, then ICAI, ICMA, all these institutions. Okay, ICSA, etc. Everything comes under this second limb. These are all education institutions. Now, what are the third type of education institution? It's services provided as a part of vocational education, approved vocational education. Okay, approved vocational education. That's a third limb. Okay, approved vocational education, that's the third limb. So first thing when you study this chapter, the first point you have to revise is what do you mean by education institution? I'll just show you a chart so you can quickly read through that. Look at the 3 points. This is the actual definition of education institution. Have a quick look at it. All good. So you are done with education institution. Okay. So once you study what education institution is, I told you they have some exemptions. All right. Fine. First, let's look at the output services, which means services provided by an education institution. Okay. So this service, okay, there are basically two entries. First entry talks about any service provided by this education institution to its students, faculty, staff. That's the main point. Any service provided by an education institution. So please remember that any service provided by education institution to students, faculty, staff. But remember that this students, faculty, staff is an important point. It says it, which means these students must be students of that education institution, not of other education institution. To their own students, faculty and staff is going to be exempted. This is the first point. This is actually very easy entry to learn because who is the supplier? Education institution. Who is the recipient? Students, faculty, staff. What is the service? It can be any service. It's going to be exempted. Now that's done. Okay. Now the next service is service related to conduct of examinations, specifically entrance exams. So when they are providing it to any party, for example, this is an education institution, the education institution is conducting some entrance exam. Okay, that let's say an institution is conducting an exam, entrance exam for their institution. Okay, so if an entrance exam is being conducted for the institution, lot of students will come and write the exam. Those students might not be students of that institution, right? It will be from other institution coming to this institution. Even that is going to be exempted. These are the two entries. Let's quickly read the entries. I want you to look at these 2 points. This is the output supplies that's exempted. Yes, business schools are also included in this. Such colleges are also included. Okay, let's have a quick read. All good. Okay, with that we are done with the output services that are exempted. Okay, now the question is what are the input services? Okay, To understand what are the input service exempted, you have to see that like government has notified certain services. Some services are exempted when provided to schools, but taxable when provided to other institutions. Some services are exempted when provided to all the three. So that's what you have to learn over here. Okay. So for that, let me give you a technique. Okay. Fine. So for example, some services are exempted only when provided to schools, which means prescriptive higher secondary school. The question, what are those services? Okay, so I'll just quickly read those services. If you look over here, I'm mentioning some services, these many services. Okay, so whichever study material you're following, you'll definitely have this over here. The first one is transportation of students, faculty and staff, exempted. But remember, only when provided to schools. Taxable when provided to colleges or ITCs. That's the approved vocation is basically ITCs. Okay, done. Then next is catering service. Okay, providing food, right? This includes midday meal schemes. Keep that in mind. It's a circular. Includes midday meal schemes. Next one is security cleaning or housekeeping. Okay, but here you have to keep one important point in mind. Security cleaning or housekeeping is exempted when provided to school only when this point is coming into the picture. What is it? Performed in such education institution. You provide it anywhere, it's going to be taxable. For example, a school is having their annual day celebration outside the school in a town hall. And if the security or cleaning service is directly received to that town hall, is going to be taxable. It's something that they have asked for exam. Keep that in your mind. Okay, so catering, it can be anywhere. It can be in the school or outside the school. The only thing is the recipient must be a school. The actual service can be received inside the school or outside the school. It's fine. But when it comes to security cleaning or housekeeping, please keep in your mind that it should be happening only inside the school. Only then you can get the exemption. Anywhere it's going to be taxable. All good. So these three applicable only for schools. Just have a quick read. Only for schools. All right. Okay, good. I hope that's clear. Okay, fine. The next thing that I have to learn is this service. Okay, this service basically related to admission or conduct of examination. So basically, what all services can come? Service related to printing of question paper, being an invigilator in the exam hall, checking answer sheets, etc., etc. All the services related to conduct of examination, including renting out building for conduct of examination. Renting out building for conduct of examination. All these points comes under this box. Now this box is applicable for all three, which means preschool up to higher secondary school. All right, colleges, ITC. It's applicable for all three. This is applicable for all three. Keep that in your mind. Okay, just read the entry. All good. Now there is one more entry, and that is this. This is applicable only for colleges. Colleges, by colleges I mean services for, education is a part of curriculum for obtaining a qualification recognized by Indian law. Okay, this is only for colleges. Supply of online journals. All good? Perfect. Which means we are done with input service. So please understand that input service, you have to classify it into three cases. One, applicable only for schools. Second, applicable for all three. Third, applicable only for college. And you already know which these services are. Okay, so keep that in your mind. And with that, we're done with input services. Done. So once you're done with so far, you're actually done with education service. Okay, I wanted to do something. I wanted to thoroughly read through all the clarifications given to the education service. Once you're done with this, you already know what education service is. It will be very easy to learn the clarification. Make sure you go through all the clarifications. Okay, and I would give one more tip. There are a lot of clarifications with respect to education. I think education is one of the entries where you have most number of clarifications. It's all very easy to understand. For example, National Testing Agency. Okay, you all might be very familiar with who this is, National Testing Agency. Okay, so National Testing Agency, for the purposes of conduct of examination, shall be treated as education institution. This is a clarification, which means any service that they receive with relation to conduct of examination is going to be exempted. Even though they are not education institution, for the purpose of conducting of examination, treat them as that. Similarly, CBSE. Again, you all know what CBSE is, an education board, right? CBSE is not an educational institution, but for the purpose of conduct of examination, it can also be treated as education institution. Such clarifications are given in a study material. Make sure you have a quick read of that. So note it down, you have to read the circulars related to education. But once this entry is done, it's relatively easy to study the clarification. Then there is a clarification regarding IIMs. You all know what IIM is. It's the Institute of Management. They provide a lot of long-term qualifications like MBA. Okay, so even though the course is long-term and you get a qualification, it is going to be completely exempted. But these IIMs might provide short-term courses. This IIM might provide short-term courses. Such short-term courses are going to be taxable. Got the idea? Yes. So these clarifications are very easy to learn if the entry is thorough. So entry, we already had a quick revision. Make sure you read all the clarifications. And of course, you can text me if you have any doubts. Right? Continuing. With that, we're done with education institutions. Okay. Then there's a relatively new entry. This is not a very new amendment. Came a couple of attempts back. But this entry, just keep this in your mind. This is also related to education institution. They have already asked for CA final. Okay, fine. Just read the entry, please. This entry is exempted. I'll explain it to you. Finish reading? Okay, fine. Here what they're talking about is we are actually discussing the concept of affiliation. Okay, so there are a lot of central and state educational boards, right? For example, CBSE, state boards, etc. So these boards, they will provide affiliation services to schools. So basically, when you go to a school, we can see that that school is CBSE school, this school is state board. How do we know that it's, how can we ensure that they're CBSE or state board? They should have affiliation with either CBSE or state boards. This is not free. CBSE or state boards they will collect money from these institutions to give them affiliation. The simple point is this affiliation is actually exempted only if the schools are government schools. If it's a private school getting affiliation, it's going to be taxable. Government school getting affiliation is exempted. That's the point over here. Not a very important entry, but a relatively new entry. Let's keep that in your mind. Okay, so we have already revised the entries related to education. Now, please make sure you have a thorough reading of this and also look at all the clarifications. Done. Okay, the next entry I am going to focus on is basically healthcare service. Healthcare, again, a very important service. Healthcare service. Here, actually, the entry is relatively easy to study because this is the entry. Okay, this is the entry. What do we have over here? Services by way of. So remember, we are talking about healthcare service. The next service is healthcare. Okay, fine. So if you look over here, services by way of healthcare service by these three entities are going to be exempted. So when these three entities do any healthcare service is going to be exempted. So who are these three entities? The first one is a clinical establishment. I want you to study the definition of clinical establishment. Please make sure you know it. It includes basically all this clinics, hospitals, sanitariums, etc. Please make sure you know that. That's clinical establishment. Next is authorized medical practitioner. Who's that? Basically, the doctors who have the qualification and membership to practice. There, authors, medical practitioner. Make sure you look at the definition. Just read it once. You'll be thorough. Next, paramedic. Who is a paramedic? They are basically professionals who assist doctors. Okay. For example, lab assistants, okay, physiotherapists, etc. All they come under paramedic. So when these three entities provide any kind of healthcare service, is going to be exempted. Okay. Now there is just one question that remains. What do you mean by healthcare? What is meant by healthcare? Okay. So usually what I do is I give students a detailed chart talking about healthcare. All right. And let me just quickly revise using the same chart. Okay. So if you have this, if you have my study material, you'll be having this chart. Else, you can pause the video and write it down. That's it. Very easy to do. Okay. Fine. So what is my healthcare service? By health. So remember, why are we studying healthcare service? Because when this service is provided by those three entities, it's going to be exempted. So we have to know, what do you mean by healthcare service? What are covered over here? What are not covered over here? So the first point that they say is healthcare service means we are actually diagnosing treatment or care. We are actually identifying the issue or we are treating or care. What are we identifying or caring for? These things. Illness, injury, deformity, abnormality, pregnancy. So we are trying to see whether a person has any of these points, and if they have, the corresponding healthcare as well. Okay, that's the first thing we actually see. Okay, fine. Now, once it's identified, we actually give the care, right? Now, when this identification or this taking care of this activity should happen in a recognized system of medicine in India. So automatically the question is, what do you mean by recognized system of medicine in India? These are. Please read. Got the idea? Okay, fine. So keep that in your mind. So far what did we learn? We learned that basically we are trying to identify if a person has these issues. If he has these issues, we are actually talking about even the care. Both these are healthcare. But the important point is it should be in any of the recognized system. These are the recognized systems. So if you look over here, Reiki is not given over here. Reiki is not a recognized system of medicine in India. So if a Reiki treatment is being given, it's going to be taxable. Similarly, acupuncture is not given over here. So acupuncture treatment is also going to be taxable because it's not a recognized system of medicine in India as per this list. Okay, fine. Then comes an important point. It is not just the service of identifying or treating. It even includes transportation of the patient. So read this point. You're actually transporting the patient to and from a clinical establishment. What do you mean by that? Taken to hospital, bring back to home. Those services are also going to be exempted. Okay, done. So this is the basic concept of healthcare service. Now, we have to remember something. Actually, yesterday when we were talking about the chapter supply, we talked about non-supplies. Okay, there we did discuss about transportation of diseased body. So transportation of diseased body is not at all a supply under GST. But if a person is transporting a patient to hospital, that is actually supply. But that supply is exempted. Keep that in your mind. Okay, it's an important point. All right. The next point is, we are talking about again healthcare service. Healthcare service does not include certain services. Okay, for example, hair transplant and cosmetic or plastic surgery. So if you look at these two, these are not basically life-saving treatments, right? So basically, hair transplant or cosmetic surgery is going to be taxable. That's the main point. Good. But if these two activities are undertaken to restore or reconstruct anatomy or functions of a human body affected due to any of these, for example, that a person has a defect by birth, an issue by birth, and to resolve that, we are taking either hair transplant or cosmetic surgery. That's going to be exempted. It's going to be exempted. The classic case that they have given in ICS study material is cleft lip. Cleft lip. It's an issue many kids can have by birth. It can be resolved using a cosmetic surgery. Such a cosmetic surgery is basically exempted. Or a person had had a serious burn, and for that burn, he's actually taking cosmetic surgery, it's going to be exempted. So I hope that's fairly clear to you. This is the basic concept regarding healthcare service. So what I want to do is just quickly read through the healthcare service definition. This is important. They have tested this multiple times. Please read this. They have even asked questions just from healthcare for 4 marks. That also has happened. Good. So that's about healthcare service. Okay. So if you are just following the marathon continuously, you know that so far we have covered. First we studied charitable. Okay. Then we had a quick look at agriculture. Then we had a quick look at education. Now we're looking at healthcare. Okay, fine. So let's look at what else is to be learned over here. Now, the next important point is this chart. Let me explain what this chart is to you. If you have already studied, you might be quite familiar with this. But if you are not, let's have a quick analysis. Basically, when you're taking room on rent in a hospital. So basically, if a person is admitted to a hospital, he will be treated as IP, right? Inpatient. So hospital will collect a room rent from that patient. Even that room rent is actually exempted from GST. But there's a criteria. The rent of room must be up to rupees 5,000. So up to 5,000 is exempted. More than 5,000 is actually going to be taxable. More than 5,000 is going to be taxable. That's the basic concept. Now, when you say more than 5,000 is taxable, certain rooms, even if the rate is more than 5,000, it's still going to be exempted. Those rooms are these rooms. ICU, CCU, ICCU, and ICU. So these rooms, whatever be the rent, is going to be completely exempted. Okay, so this is an important point. They have already tested for exam. Just look at the chart, see if it's clear to you. All good. Here also make sure that you actually study the other clarifications given. Okay, so some of the most important clarifications as I'm discussing, the other clarification, please make sure you go through that. Okay. Yeah, and there is one more entry over here. This is related to veterinary services. That's also very easy. That's also exempted. That's it. Just quickly understand that. And one important clarification that had come like a couple of attempts back is basically ART IVF. ART IVF is basically a treatment taken for infertility. So there was a doubt whether that is taxable or not. The government has clarified it is also exempted. That's clarification. So one line point is ART IVF is also going to be exempted. Good. Okay. So you have an overall idea of healthcare. There's one more thing you have to keep in mind regarding healthcare. We discussed about ambulances, right? So if you look over here, when we studied the definition of healthcare, we actually talked about this point. So you already know ambulance is exempted, but you have to understand something. Healthcare service is exempted when they are provided by clinical establishment, paramedic, or authorized medical practitioner. Understand what I'm saying? If you look over here, healthcare services, okay, is exempted Okay, ignore this point. Okay, healthcare services is exempted only when provided by these three. So there's a question, what about private ambulances? So there are many private organizations who run ambulance not as a part of not as a part of a hospital. They will be having a private ambulance. So that entry is not covered over here. Private ambulances. But there's a separate entry for private ambulance, and that is this. That is also exempted. Okay, and with that we are done with healthcare. Okay, fine. The next entry that I want you to focus on is transportation of passenger. Okay, next is transportation of passenger. So remember, yesterday when we studied place of supply, you already know how to identify place of supply of transportation of passenger. You already know how to identify place of supply with respect to transportation of passenger. Okay, now we are going to look at exemptions related to transportation of passenger. Okay, fine. So basically when you study this, I'll give you a tip. When you're looking at transportation of passengers, okay, we actually have it for air, water, rail, road. So when you're transporting passengers in all these four modes, government has actually given exemptions. Okay, let's quickly look at these exemptions. The first is by air. Okay, so I'll give you an overall idea about for then we look at the charts. By air, you have to study some places. There are some northeastern states given as specified. If an aircraft is landing there or taking off from there, that charge is going to be exempted. That's what you learn about air. All good? In water, so basically first air, keep it in mind, we are studying some places. In water, we actually divide it into two. One is inland water, the other is main vessels. All right. Inland water is going to be exempted. What about vessels? In the case of vessels, you look at the purpose, whether it is tourism or public transport. Why do you look like that? Why are you looking at like that? Because if it's tourism, it's going to be taxable. Public transport is exempted. So quick summary, it's going to be exempted. Okay. What about by rail? By rail is very easy. You look whether it's AC or non-AC. If it's AC, it's going to be taxable. Non-AC is going to be exempted. All right. Okay. So I'm assuming that you're writing it down along with me because it will be very easy for you to revise when you look at this. Or you can just look at my study material or the other material you use. But it will be, if you're writing it along with me, it will be easy for you to quickly revise. Okay, fine. What about by road? By road, we actually divide it into two. We divide it into stage carriage and contract carriage. Stage carriage and contract carriage. So how is the exemption over here? In stage carriage, it's very easy to learn. Again, it's AC, non-AC. AC means taxable, non-AC means exempted. Done. What about contract carriage? It's very similar. AC means taxable, non-AC means exempted. This is how you basically study transportation of passengers. There are some other extra points you should learn. We'll go into that. But again, quickly saying, by air, look at the places. By water, inland waterway exempted. Other main vessels, purpose, tourism or not. Tourism taxable, public transport exempted. Now, rail, AC, non-AC. Road, stage carriage, contract carriage. Both AC taxable, non-AC exempted. This is the main thing you have to keep in your mind. Okay, predominant thing. Then there are other points to drill down to that we can have a quick revision now itself. Let's look into it. I'm just going to show you the charts. Okay, so the first point we are going to look at is basically air. This is the air point. Just read the chart. Quickly read it. All good? Okay. Now, when you read the chart, one important point that should come to your mind is regarding this. Okay. So these are the northeastern places we were talking about. So if the flight is landing there or taking off from there, it's going to be accepted. But the seat class you take should be economy class. All other classes are going to be taxable. First class business class will be taxable. All good? Fine. Next, we look at road. I'm actually showing the stage carriage chart. Just look at it. Again, as is the revision class, I'm not showing multiple examples or detailed presentation for each and every point. I'm just quickly going through that because in my class, we have already seen the students in my class. We have already had a thorough discussion of all this with lot of examples, lot of stories, etc. But here I'm just showing you the provision so you can quickly revise for the examination. Okay, here when you read this, you can see something. Stage carriage, as we discussed, air conditioned is exempt. Air conditioned is taxable. Non-air conditioned is exempt. But I would like to add one more point to here. What is that? That is e-commerce operator. If this service is provided through e-commerce operator, it's going to be taxable. And we know why. Because we actually looked at the charge chapter. When we looked at the chapter charge, yesterday, we studied 9 subsection 5. Okay, there we know that certain services when provided through ECO, GST should be paid by ECO. Transportation was there. Remember? Yeah. So basically, when we say when it's provided through ECO, it's taxable because the GST will be paid by e-commerce operator. That's the reason. That's the reason we say it's going to be taxable. Easy. Okay. Now look at contract carriage. Contract carriage. Contract carriage, the initial part is almost similar. Non-air conditioned, exempt, air conditioned, taxable. That's the starting point. And this is also there. Supplied through ECO is going to be taxable. Now you have to keep in mind that there are 2 more points under taxable. Okay, in the case of contract carriage, radio taxi, it's a specific type of contract carriage, always going to be taxable, AC or non-AC. Keep that in your mind. They've already asked for exam. Okay, now the contract carriage that you take, it can either be for any of these purposes, then it's again going to be taxable, AC or non-AC. Keep that also in your mind. For tourism, conductor tour, charter or hire, AC non-AC is going to be taxable. Okay, so this chart is important related to contract carriage. So even though here we just quickly talked that AC taxable, non-AC exempted, this has some other detailed drill points that you have to be thorough with. That's the chart that I showed you now. Okay, just read this. All good? Okay, fine. So the next thing that you have to study is related to auto rickshaw and metered cabs. Again, very easy. Very easy to learn. Okay, because if you're looking at auto rickshaw or metered cab, okay, here we are going to look at only one point, whether it is being provided through e-commerce operator. If supplied through ECO, it's going to be taxable. Other cases is going to be exempt. As easy as that. Nothing else to be looked at. Supplied through ECO is going to be taxable. Other cases is going to be exempted. Okay, done. Then by railway, look at the chart. We already discussed this. Just read. Same, right? AC and first class is going to be taxable. Non-AC is going to be exempted. Okay, fine. Next, also keep in mind that these three are also going to be exempted. Quickly revise. Metro, monorail, tramway is going to be exempted. Okay. So with that, we are done with by railway. The next point that you should quickly revise is this related to vessel. I already talked about this, right? Inland waterway. Just quickly read. Easy. Inland waterway is going to be exempted. Okay. Now, what about other vessels? In the case of other vessels, you have to look at with what's the purpose. Public transport is going to be exempted. Tourism purpose is going to be taxable. Easy to understand. Okay. And with that, we are done with transportation of passengers. With transportation of passengers. Okay. Done. Now, the next thing we should look at is basically transportation of goods. Okay. Transportation of goods. Let's take a short break. Okay. Let's take a break for 10 minutes and we'll continue after that. We have been studying for 1 hour continuously. So those who are with me, let's take a break of 10 minutes. All right, let's continue. Next, we're going to look at exemption related to transportation of goods. So we already looked at service. Let's look at transportation of goods. Okay, transportation of goods. Now, goods. Actually, we had a small discussion regarding goods yesterday when we were studying GTA. Okay, we already had a small discussion. Let's continue along with that. Okay, fine. Now, goods. Again, just like we talked about passengers, when we talk about goods, we divide it into four. Okay, first we look at road, then let's look at air, then water and rail. First, by road. By road, we can divide it into three. First, let's divide it into two. No, let's do it into three. Sorry. Okay, the first thing is courier service. Courier service is always going to be taxable. There is no exemption. Next, let's look at GTA and other than GTA. This is what we discussed yesterday. Again, I'm just going to quickly run through that. GTA is going to have exemption based on goods and recipient. So certain goods can have exemption and certain recipient can also have exemption. Now, other than GTA is going to be exempted. This is what we learned. So when we are studying GTA, to learn the exemption is very easy. Look at who the which all goods we have to talk about, and also look at the recipient. If you're thorough with both those points, you're done with the exemption. Now, when you look at air, it's relatively easy because air, if the transportation happening inside India, it's always going to be taxable. There are no exemptions. When the transportation happening by air and it is inside and it's always going to be taxable, there are going to be no exemptions. Okay, now what about water? Okay, so again, for CA Inter, only inside India is applicable. When you look at final level, we have to look at what happens when the goods are being taken outside the country. That is not applicable for intermediate level, so I'm not going into that. Okay, now what about water? Water again I divide into two. All right, the first thing is inland and other vessels. Just like passengers, inland is going to be exempted. What about vessel? For vessel, it's goods based exemption. What do you mean by goods based? When certain goods are being transported by vessel, it's going to be exempted. Okay, done. Now, what about rail? If you're looking by rail, again, there's just one exception, and that is basically goods based. There is just a goods based exemption. So, taxable or exempted. It's actually all those specific goods is going to be exempted. So the only thing you have to learn is which all goods are covered over here. That's actually really easy because this goods, the vessel goods and the GTA goods, these are all same type of goods. So when you study the goods related to GTA, you're automatically studying the goods related to vessel and rail. With that, we're done with all. I hope that's clear to you. So the only thing we have to do is you have to look at which all goods are covered. Okay, so let's just quickly run through that. Okay, I'm just going to show you the goods based exemption. The rest you can read on your own. Okay, if you look over here, these are the goods by rail or vessel. When they're transporting, you get exemption. So remember, the same goods is exempted for GT as well. Okay, which all are the goods? Relief materials meant for disasters, defense or military equipment, newspaper, magazines, agriculture produce, including milk, salt, food grains, including flour, pulses, rice, organic manure. Okay, just a second. Hey guys, I'm really sorry. I had a very important call to attend to. So that's the reason I had to go. I'm sorry for that. Let's continue with the session. I hope you already finished reading the exemptions related to goods-based exemption. Okay. So the goods-based exemption, we actually talked about the list of goods. So this goods has multiple impact. One, for GTA's goods-based exemption, the same goods are to be used. Then for railway, goods-based exemption, these goods are to be used. Then the next one is by vessel. Okay, all the three cases. But please remember that inland waterway is going to be completely exempted. Also keep that in your mind. Okay, fine. And with that, we are done with goods-based exemption. Okay, that's also done. Okay, the next important exemption that I want you to revise over here is banking and financial service. Banking and financial service. Here, there is one very important exemption that is related to interest. This has multiple impact in different chapters as well. So you should be thorough with this exemption. The entry is actually relatively very easy. If you look over here, I've prepared a small chart over here to quickly look at this. If you look over here, services by way of extending deposits, loans or advances. Insofar as the consideration is represented by way of interest or discount is exempted. Okay. So the question is, what do you mean by this? So if there is any loan or deposit, okay, the first thing you have to remember is loan or deposit will not attract GST. Okay, because it is activity in money. It's activity in money. As it's activity in money, it's not a supply. All good? Now the question is, what about the interest? What about the interest? The interest element is actually going to be treated as supply. The interest element will be treated as supply. This is something that we've already learned in the chapter supply. But here we are learning this interest is going to be accepted. That's the main point. Now, here there is one more important point you have to keep in your mind. Even though this interest is going to be exempted from GST, there is one interest that is taxable. Do you remember that one? It is credit card interest. So please keep that in your mind. Credit card interest is actually going to be taxable. All other interest is going to be exempted. Credit card is going to be taxable. This is the point you have to remember about banking service. Okay, fine. Now, the other important point over here is conversion of currency. So this is also something we've already discussed. We already understood that if you're converting currency from one form to another, that is also not going to be supply. Let's say you have dollar, you convert that to rupee, or you convert rupee to, let's say, euro. All these transactions are converting one form of money to another form of money, not going to be supply. Correct. But this will also be treated as supply when there is a separate consideration for that. So basically, if there is any extra charge that they charge from us for converting currency, that's going to be supply, correct? Yes. Now the question is, it is taxable or exempted? Actually, it is exempted when we public deals with the bank or authorized dealers. So let me just quickly explain that to you. Basically, for you to convert currency, we usually go to either a bank or an authorized dealer. Okay, so you go to bank or an authorized dealer. You, for example, you or me, we go over to any of these places and convert the currency. Definitely, they are going to have some extra charge. This charge is going to be taxable. There is no exemption. So the question is, when can we get exemption for this? Only when these entities deal among themselves for the currency conversion. For example, bank to bank, exempted. Bank to authorized dealer, exempted. Authorized dealer to other authorized dealer, it's also going to be exempted. Who is an authorized dealer? Basically, authorized dealer is an entity authorized by RBI under FEMA Act for converting currency. That's the basic concept of authorized dealer. Keep that in your mind. All good? Perfect. So with that, we're done with that particular entry as well. Okay, fine. I want you to read all the clarification regarding banking and make sure you have a thorough understanding. Okay. Now, next heading we have to learn. So we are done with banking. We revised banking as well. Next is basically entry to events. Entry to events and event management. Entry to event management. Okay, this is actually a very easy entry to learn because we are actually looking at the entry ticket to certain events. So when I talk about entry tickets, please keep in your mind, we already studied the place of supply for this. Yesterday we revised the place of supply. So it has connection with that. That's an important point you have to remember. Even with transportation of goods or passengers, that also has connection with place of supply. Because we actually look at what is the place of supply of that as well, right? So similarly over here also we have connection. Okay, fine. So the right to admission to various events, basically we are dividing into two. There are some places given over here. The specialty of these places are whatever be the entry ticket, it's going to be completely exempted. Okay. So if you look over here, there is museum, national park, wildlife sanctuary, tiger reserve, zoo. It's going to be completely exempted. There is no limit. Okay. Now there are some other places given over here. I wanted to quickly read through those places. Okay. These places are going to be completely taxable or exempted. No, there is a monetary limit. And that limit is going to be 500 rupees. If the amount is less than 500, it's going to be exempted. If it is more than 500, it's going to be taxable. The limit is 500. Just look at this. Just read those places. All good? Okay, perfect. Now, the other important thing you have to study over here is performance by artist. Again, they have tested for exam. Performance by artist. Okay, fine. So here, what you have to do is, so what is the entry over here, performance by artist? Let's say there's an event. For an event, one person is coming and performing some, let's say, dance or music or something. We'll get exemption. But there are some conditions. The first condition is the dance or music or whatever activity you do, it should actually be in classical or folk art form. It should not be any random activity. It should be a classical or folk art form. That's the first point, important point. Okay, fine. The next important point is this dance performance, the person, when they're taking money, that money should be up to rupees 1.5 lakhs. Okay, more than 1.5 it's going to be taxable. If these conditions are cumulatively satisfied, it is going to be accepted. So what all you have to see? First, the performance must be in folk or classical art form. Okay, the next thing, the monetary amount should be up to 1.5 lakhs. Just look at the chart. Quickly revise the chart. Revised? Okay, perfect. So we are done with entry to events as well. The next exemption, again, I'm just going to quickly pick up the next important exemption. Of course, you have to look at the other exemptions as well when you're revising. Just keep in your mind that Residence Welfare Association. Okay, so just write it down over here. That Residence Welfare Association, please make sure you study that. Okay, what is the entry over there? The Residence Welfare Association will be collecting money from the members for some cumulative activity for the entire association. Like, for example, they will be collecting money for the security guard, the common playground, etc. Right? There's a monetary limit for that. Remember what the limit is? It is 7,500 rupees. Below 7,500, it's going to be exempted. More than 7,500 is going to be taxable. Okay, so quickly revise that as well. That's important. Okay. The next one. Yeah. Services provided by government and to government. Okay. So services provided by government and to government. Here, this by government portion, we actually covered significantly when we are looking at the RCM. Yesterday, when we were looking at reverse touch mechanism, we actually studied some charts, right? So I told you if you're studying the charts, you are done with all that exemptions. We have covered major exemptions, but again, go through the exemption chapter as well. Look at this. Okay. And when it's talking about to government, I'll be teaching a few now. We look into it. And I want you to remember one more thing. See, when you're studying exemption, one important tip that I would like to give is do not try to study all exemptions in one shot. Do not try to learn all exemptions in one shot. Okay, it's not practically possible to learn all exemptions in one shot. Okay, so take one heading, study that. All right, well, let's say you're starting the revision of your IDT and you're taking one chapter. Let's say you're studying the chapter supply. Along with supply, finish one exemption. Okay, next, let's say you're studying the chapter registration. With that, study one exemption. That will be much better than looking at all exemptions in one shot, because there's a huge chapter, lot of exemptions are being covered in. Right now, when you're listening to me, we are covering significant portion in like 1.5 hours, but still, when you're doing it on your own, it's going to be actually a bit tricky. Okay, so just make sure that you study one exemption in each chapter. That will be much easier for you to learn. Okay, fine. So by government, I told you we already covered with RCM. Let's look at some services related to government. Okay, so before I go forward, I want you to learn. You have to thoroughly revise. The only way you can actually remember exemptions is revision. There is no easy way to do this. You have to revise it multiple times. Okay, each topic, one-time reading will not help you. Two-time reading will not help you. You have to revise it multiple times till you're thorough with it. Only then you can remember exemptions. Okay, there is no other easy way for this. Okay, that limits, etc. You have to, particularly for example, when you look at a particular exemption, you have to just don't look at the point, just think and try to get the number of days or the monetary amount or whatever it is, and just look when you make a mistake, look, correct it. Okay, but yes, unfortunately, there is no other way to do it. Revision is the only way, right? I always say that to CS students, like all the professional courses, there is no easy way to get out of this. If there is easy way, everybody will get out of this, right? You should be consistent. You should have a thorough revision and extreme discipline when you're revising. That's the only way you can actually crack this course. Okay, and of course, revision is really, really helpful. So I'm just trying to help you with the revision by quickly running through all the provisions once more. Okay, fine. Now this entry is an important entry you have to keep in your mind. This is related to old age home. Service related to old age home. So basically, when a person is living in an old age home, he'll have to give some money, right? That money is going to be exempt from GST. But there is some condition. The first condition is this old age home should be run by central government, state government, or an entity under 12A. Or an entity under 12A. Okay. Next, the people who live in that old age home, their age should be 60 or above. Below 60, not allowed. It's going to be taxable. The third condition is the monetary amount you collect from that people in the old age home should be 60,000 or more. Should be up to 25,000, not 60,000, up to 25,000. These are the conditions to be satisfied. Okay, so what should you look at? The first thing is it should be run by either central government, state government, or a 12 registered entity. Point number 1. Point number 2, the residence age should be 60 or above. Point number 3, the amount collected should be up to 25,000. Just quickly read this. All good. Okay, fine. Now, let's look at services provided to government. Okay, service provided to government. When services are provided to government, the predominant point you have to keep in mind is, remember, when we're looking at the chapter supply, when we studied this chapter called supply, there was an important point over there. I actually asked you to read it on your own, not very important, but read it on your own, that Article 243G and W of Indian Constitution. Okay, Article 243G and W of Indian Constitution. What is this two article? 243G and 243W. These two articles actually talk about the activities to be done by local authority, right? That's basically panchayat or municipality. Okay. I hope you're talking about the previous entry, right? The 12A entry. Okay, you're talking about that. I hope you're talking about the old age home. If it's not under 12A, it's going to be taxable. It should either be under 12A or it should be run by government. Else it's going to be taxable. Just answering that comment. There will be slight delay between your comment and my answer because of the relay delay. But yeah, correct. Okay, done. Now, so Article 243G or 243W, it can either be a panchayat or a municipality. Okay, so any activity that they do is not a supply. This is something you actually learn in the chapter supply. We are already done with that. Okay, the new point you have to learn here is, for doing this, for any activity doing this, they might be taking different services from outside. They might be taking different services from outside. Just 1 second. Okay. Now, so to provide these activities by 243G or W, any activity that the panchayat or municipality do is not a supply, right? To do that, they might be taking some services from outside. Such services are going to be exempted. Okay, but you have to remember that there are two conditions. It should either be a pure service. What is pure service? Pure service means there is no element of good in it. It should be 100% pure service. And there is a second point. And the second point is, even if there is good, the total amount of good involved should be less than 25%. Only then you can get exemption. So let me just quickly go through it again. So there's a panchayat or municipality. Any activity they do under 243G or 243W is not a supply. Already learned the chapter supply. Now, to provide this activity, if they are taking any service from outside, that service is going to be exempted. But the criteria is it should either be completely pure service, or if there's an involvement of goods, the total amount of goods should be up to 25%. You have to study this. You know why? This has an impact in the chapter TDS TCS, especially TDS. So how can it have an impact? You remember, when you TDS is a topic that you have to revise. Okay, very important topic. Not very important, but very easy topic. That's very easy. Okay, very easy topic. So in TDS, the predominant activity, the recipient is government. Right? Under section 51, recipient is government. So there, If the supply is exempt, there is no TDS. So very commonly they test this along with that. They will give you a point that the following services are provided to government, whether TDS is applicable or not. One among that can be this. So please keep this in your mind that if it's a pure service, it's going to be exempted. Even if there is an element of goods, the goods impact should be up to 25%. You can still get exemption. All perfect. Okay. So that's also done. Provided to government. Now, yeah, there are other small entries related to government. Not very tricky. I am leaving it on your own. You can read on your own. Okay, just go through it. Now, some other important points. Yeah, this was an amendment, so I'll just quickly run through that. Okay, this point, I'll highlight it. Sorry. Okay, the following service by Indian Railways is exempted. This actually came as an amendment couple of attempts back. That's why I'm just not a very important entry, very easy entry. Okay, so in like railway station, we actually get service like platform ticket, repairing room, waiting room, clock room, battery operated car services, etc. These activities are going to be completely exempted. It's going to be completely exempted. Okay, that's it. Okay, now the other point is this. Okay, I'm just highlighting from my study material. So here the point is, see, Indian Railway for better administration are divided into different zones, north, south, east, west, etc. So if one zone is providing service to another zone, that is also going to be exempted. That's it. Entry 60. Just read. All good. Okay. The next exemption I want you to revise now is related to construction service. It's related to construction service. Okay. Further, I've prepared a chart over here for quick revision. This chart should be really helpful for you to understand. Okay, fine. So let's quickly revise it. In the case of construction service, basically the service is divided into two. We are dividing into two. Okay. One is works contract service. Okay. This is actually going to be always taxable. So please understand that under GST, there are no exemptions for works contract service. It's always going to be taxable. Now, what if it's not works contract? What about other services? If the service is not works contract, if it's other service, so I hope you guys remember what is the meaning of works contract service. For the construction of an immovable property, goods and services supplied together. For the construction of an immovable property, goods and services are supplied together. That is called works contract. Now, if it is not works contract, so what do you mean by not works contract? We are taking it separately, taking the goods and service separately. Can we get an exemption? Yes, but it's possible only for pure labor. You will not get exemption for any other, and it's only applicable for pure labor. Okay, so what about other supplies? That's going to be taxable. For pure labor, you can get exemption in two different manners. If the house being constructed is under PMAY, that's Pradhana Mantri Awas Yojana scheme. If it's under PMAY scheme, even if you're constructing a new home or you're repairing, it's going to be exempted. What is going to be exempted? Pure labor is going to be exempted. Okay. Now, what if it's not under Pradhana Mantri Awas Yojana? If it's not under PMAY scheme, if it's under any other scheme, it depends upon whether you're constructing a single residential unit or an apartment. Apartment, of course, is going to be taxable. But if it's a single residential unit, if it's original work, it's going to be exempted. Repair is going to be taxable. Okay, so let's just quickly revise what I explained right now. Just look over here. Forget the chart. Remember this. So the first thing is works contract service. It's always going to be taxable. Absolutely no exemption. Always going to be taxable. Okay, done. If it's not works contract, split it into two. Other cases, right? You can get exemption only for pure labor. Okay, what about other case? Other case is always going to be taxable. What do you mean by other case? Engineering service, architect service, etc. etc. That's all going to be taxable. Only pure labor is going to be exempted. Now, pure labor, to get exemption, we have to see whether the construction is happening as per Pradhana Mantri Awas Yojana. If it is as per Pradhana Mantri Awas Yojana, even if you're constructing a new house or if you're repairing an existing house, it's going to be accepted. If it is not Pradhan Mantri Awas Yojana, you have to see whether you are constructing a single residential unit or you are constructing an apartment. Apartment, taxable. Single residential unit, if you are constructing a new building, it's going to be exempted. Okay. If it's repair, it's going to be taxable. That's the main point. Just look at the chart. See if you can understand these points. I hope that's all good. Okay, done. So I hope that's clear. The next exemption I want you to revise is, yeah, this is an amendment. Okay, it's a very important amendment. And that's related to life insurance and health insurance. Important but very easy. One line summary, life insurance and health insurance both are exempted now, completely exempted. Okay, the only thing you have to see is it should not be a group insurance. Okay, just read this point. All highlighted points, please read. Okay, that's it. So keep this in your mind. This is a new entry. Life insurance and health insurance both are going to be exempted. It should not be group insurance. Okay, I'll give you the amendment PDF. Once you get the PDF, you can see that I've given a detailed explanation regarding this. What do you mean by group? All the stories are there. Please read it. Okay, fine. Now you have to remember this point also. Life and health is exempted. Along with that, its reinsurance is also exempted. Read the point. Life and health is exempted. Along with that, reinsurance of life and health is also going to be exempted. Okay, fine. This is an amendment. Okay, just keep that in your mind. Okay. Now, other one important exemption that I want you to revise is this. They've asked this for exam, and students, as these are the end part of exemption, usually skip all these exemptions. Please do not do that. Okay, let's try to see them. For example, look at this. This first point. Please read that. Okay, so if there is a state transport undertaking, what do you mean? If I'm talking about Kerala, Kerala will have something called KSRTC. Okay, Tamil Nadu will have its own state transport undertaking, right? Right. So if you're giving a vehicle on hire to this state transport undertaking, it's going to be exempted. But the condition is it should be a big vehicle, it should be a bus, because they're saying more than 12 persons. More than 12 persons is basically what? Bus, right? Big vehicle. Such vehicles are going to be exempted. Okay. Similarly, we have one more exemption. We are actually providing something to GTA. We know who GTA is. But what are we giving? Please read. A means for transporting goods. is also going to be exempted. Okay. Now the next point, I will actually use a small example to explain because that will be easier. Okay, ignore the heading. I'm not going to show that example. Now, for example, see, let's say there's this person. This person is providing transportation of students, faculty, and staff. And he's providing the service to these three. So these are all part of my main presentation. I'm just showing you the quick part. Okay, fine. So as you can see, when provided to school, it's going to be exempted. College is going to be taxable. IT is going to be taxable. We just learned this when we were looking at exemptions related to education. Now, imagine this case where this person is providing transport and service to school. We already learned it's exempted. Now, if this person, then this will become taxable. That's it. It's also important entry. So I want you to read this point. I'm just highlighting it for you. The blue highlighted portion. Please read that. All good? Okay. Now let's continue. Let me pick any other important. These are all done. Okay. Now there are two clarifications that I want you to revise. Okay. One clarification is regarding honorarium. Okay. So when a award function is happening, or let's say a music festival is happening, there'll be a person coming and anchoring it, right? Anchors. So these anchors will be provided with something called honorarium. It's called honorarium. There was a doubt whether honorarium is taxable or exempted. We have almost covered all the exemptions. We know that there are no exemptions related to honorarium, which means honorarium is going to be completely taxable. It's going to be completely taxable. Okay, you can just quickly read this. Okay. Yeah, I think there was a slight technical issue in between, like some internet droppage happened over here, but I think it's all going good now. Okay, perfect. Now, the next point. Okay, this is also an important clarification. This clarification actually talks about, let's say, I am buying a piece of land. I'm buying a piece of land, and this land is actually very uneven because, like, the land structure is totally uneven with a lot of uphills and downhills in the entire plot. Let's say there are some small hills in the entire plot. So very huge plot, like 20-30 acres, and very uneven land. So what I'm doing is I'm actually leveling the entire plot. And I'm actually adding drainage pipe to the entire plot, making sure it is divided into small spots, and I'm selling it. Okay. Now when I'm selling it, what happens is I'll be getting good money from this. Why? The reason for that is, now it's not an uneven land, it's a very leveled land, and it's already having drainage facility. Maybe I'll even construct roads in between the properties. So basically it's becoming a really good residential complex. The question was, now when I'm selling this land, will that attract GST? The reason for this doubt was, now when I'm selling the land, I might not be collecting just the cost of land. I will be trying to recover the cost of other expenses as well, because I have spent so much money on leveling, the drainage, the pipe, etc. Right? So government has come up with a very good clarification. Government said that, see, I can do whatever I want, but then at the end of the day, what am I doing? I am selling land. Land is immovable property. Will not attract GST. Easy clarification, right? Just read this. There is the second clarification. This one, second one. All good? Okay, so done. So with that, okay, spending almost 2 hours with a couple of breaks and other some issues in between, we have revised exemptions. Okay, it's not a small task. Okay, so if you have been with me for the last 2 hours, it means that you have had a reasonably good revision of the entire topic of exemption. Okay, this video, like the quick revision we did, you can actually, as it will be already be available with YouTube, I would suggest that even before your examination you can quickly revise through this. If you want a quick revision, 2 hours of quickly understanding all the exemptions, just keep this. Or you know what, when you're doing something else, just switch it on, keep it in your phone, listen to it, which means you can have a quick revision of all the exemptions. All right, all the major ones we have hit with all the major important points. I hope it's been useful for you guys. All right, now let's do it. Let's practice a couple of questions from this chapter, so we have a really good idea how exemptions actually they ask for examination. Okay, let's see. Okay, so first I want you to try this question. Please try this. All good? Okay. So let's look at this question. Let's try to answer this. Okay. Shanti Wellness Center, an entity registered under Section 12AB of the Income Tax Act, has furnished you the following details. Okay, let's look at it one by one. Okay, the first one is so basically they're asking you to compute the taxable value. Okay, assuming GST is 18, and they're not asking you to compute the GST, so just look at the value, and also be careful one thing, they've given that all the amount is excluding GST. So keep that in your mind. They can trick you for exam. For a question, what if they ask you the amounts are including GST? If they say it's including GST, then you have to work the entire thing by thinking it's including GST, which means the working will change. Okay, just keep that in your mind. Okay, fine. So, amount received for camps conducted for advancement of religion spirituality of the old age people. So, see, advancement of religion spirituality is a notified activity. Okay, I told you when it comes to exemption of charitable activity, the supplier must be registered under 12AB and the activity must be a notified activity. Yes, this is all done. It's going to be exempted. It's going to be exempted. Next one, provides skill development program to abandoned, orphaned or homeless children and persons over the age of 65 years in an urban area. Okay, so total is basically 3 lakhs. So first one was exempted. Second total amount is 3 lakhs. Out of the 3 lakhs, there is a skill development of abandoned, orphaned or homeless children. It's a very specific entry, already covered under notified activity. It's going to be exempted. But here the issue is, it's over the age of 65 is perfect, but the activity is happening in urban area. Exemption can be triggered only if it's under rural area. So this 3 lakh, 1 lakh is going to be exempted, 2 lakh is going to be taxable. Okay, fine. Next one, renting of premises to bookshop for business. Okay, they're giving some spiritual literature, but there is no specific exemption for that. Okay, it's not mentioned any of the charitable activity. This is going to be completely taxable. Now, granting advertisement rights to a person for publicity on the premise of the charitable religious trust. So there is advertising right being given, again not a specified activity under charitable activity. It's also going to be taxable. All right. Organized a basketball training camp for coaching teenagers. Do you remember this point? So when training in sports is given, okay, we learned that if the supplier is registered under 12AB, it's going to be exempted. The question already says that they're registered under 12AB. So yes, you will get exemption. Okay, you will get exemption. That's it. I hope now you have a clear idea regarding this. Let's look at one more question. Okay, let's look at this question. Okay, try this question, the 25 May question. Do that, please. Are you done? Look at the answers. Okay. Examine whether the following independent cases are taxable under GST. That's the basic question. First case is Dhruv Printing Press, a registered entity under GST, received an order for order of 1.5 lakhs from Vishwakarma Technical Institute, a private ITA, providing courses notified under Apprentices Act. So, actually, when I talked about education institution, I divided into three, right? The third one is approved vocational education course. Please make sure you study what is approved vocational education course, because here, when you look at that, they very specifically mention that it can be an IT or ITC affiliated with NCVET, providing courses under Apprentices Act. The provision very specifically says that. So if you read this case, we can clearly say that this Vishwakarma Technical Institute can be treated as an education institution. Yes, it is an educational institution. Okay, now here what's happening over here? Here we are actually providing service to Vishwakarma by Dhruv Printing Press. What is the service that they give? They're actually providing printing of examination, question paper, OMR, etc. I very specifically discussed about this over in the class. It's going to be completely exempted, because any service related to examination, when provided to all three types of education institution, it's actually going to be exempted. In this question, this Vishwakarma Technical Institute is an education institution. Therefore, when the service provided, it's going to be completely exempted. Okay, next one. State Board of Education, a registered entity, charge rupees 50,000 per year as affiliation charge for school. This is an amendment we discussed. From Dharmapal Trust, registered under section 12A of the Income Tax Act, which gives education from class 1 to 10. So the question is very taxable or exempted. Okay, actually, here you have to understand, this is actually a bit tricky. We already discussed about this point in the class. I told you, affiliation service is going to be exempted. When the affiliation is given to an education institution by government. Here they're making it very tricky. They're asking, this education institution is under 12A. There is no use of that. Okay, so remember this. Affiliation services provided by CBSE, state boards, etc. can be treated as exempted only when provided to a government school. If it's private school or even school by 12A, it's going to be taxable. So this is actually going to be taxable. Okay, let's look at the next question. I hope that's clear. We Care Hospital, a registered entity, charged 19,500 for 3 days from Mr. Sahil, who was admitted in intensive cardiac care unit due to heart attack. Okay, so the point is taxable or exempted. See, it's ICCU. So we discussed that the per day rent, okay, there's a limit of 5,000 per day rent. That's actually going to be, you can get exemption only if it's less than 5,000, more than 5 is going to be taxable. But whatever, all those dramas are not applicable when the party is intensive cardiac care unit, or the room is in ICCU. ICCU, even above 5,000 is actually going to be taxable. Exempted. More than 5 or less than 5 is going to be exempted. Therefore, yes, this is going to be completely exempted. Next case. Site Care Hospital, a registered entity, entered an agreement with Swadish Caterers, a registered entity, for supply of food to inpatients. Now, they send monthly bill to hospital for the food supplied by them to admitted patients. Determine taxability of this hospital. This is actually important. Listen to me. If you have a hospital, this is actually a clarification. Okay. If you have a hospital, okay, and they are providing food, who all might be taking this food? 3 types of persons might be taking the food from hospital. One is IP, who is that? Inpatients. Second is OP, outpatients. The third one is basically others. Others means bystanders of IP or person who come with OP. Okay, now others is going to be taxable because it's not healthcare. OP is also going to be taxable because it's not going to be healthcare. The only possibility of getting exemption is when provided to IP, inpatients. And it should not be the IP randomly ordering some food and eating. The point should be that the food should be given to IP as per the prescription or as per the requirement given by the nutritionist. In that case, it's going to be exempted. That is the point. Got it? So if you look at that point, yes, we can actually get exemption over here. Okay,
So this is going to be exempted because here they very specifically say that the food is given as per the advice of doctor or nutritionist. Therefore, this is actually going to be exempted. Okay, fine. Now, let's look at an exemption related to agriculture. Okay, just try to get the exemption and just try to answer this question. Okay, let's look at this. Green Agro Services, a registered person provides the following information. Compute the value of taxable supply. Right, let's look at one by one. The first case, service related to rearing of sheep. Sheep we actually rear for wool. It's going to be completely exempted. Okay. Service by artificial insemination of horses. Okay, so that's an important point you have to remember. In agriculture produce, horses are not treated as agriculture produce. Therefore, artificial insemination of all other cattle is going to be taxable. All other cattle is going to be exempted, but horse is going to be taxable. This is going to be taxable. Processing of sugarcane into jaggery. We know that sugarcane is agriculture produce. Jaggery is not. So sugarcane to jaggery is going to be taxable. Milling of paddy into rice. I specifically told you rice is not treated as agriculture produce. So paddy and rice is going to be taxable. Service by way of fumigation in a warehouse of agriculture produce. I'll explain that to you. This was exempted up to a certain time. After that, the exemption was withdrawn. So what happens now? This is going to be taxable. So agriculture, we did not look at it one by one. Okay, I just give an oral idea. I want you to go read the entire entry. Okay, only then you can clearly understand. Okay, now we will look at one more question. Okay, and we'll take a break. All right, fine. Just look at this question. 19 May. Just try to do this question. These are all asked for CA Inter. Okay, let's see. This is a bank called Apina Bank Limited. They are a commercial bank and they're giving the following information. Okay, fine. The first point is extended housing loan to its customer, 100 crores. What do you have to say about that? Please understand, this is going to be completely not a supply. We discussed that in the class. If you're giving loan, that transaction is not going to be supply. Processing fees collected from the customer on sanction of loan, taxable. We discussed interest on loan is exempted. All other is going to be taxable. Commission collected from the customer on bank guarantee, taxable. Interest income on credit card issued, taxable. Interest received on housing loan extended by the bank, that's going to be exempted. Okay, that's going to be exempted. Why this interest became taxable? Because it's credit card, that's why. Okay, minimum balance charges collected from the current account and savings account holder, that's also going to be taxable. Because the only exemption point is going to be normal interest. Any other case is going to be taxable. Okay, fine. So I hope with that we have had a good revision of this chapter called exemptions. Hope this session was helpful for you. Let's take a break. After the break is done, we are going to come back and we are going to look at input tax credit. Okay, again, a very important chapter for the examination. We are going to quickly revise the entire chapter called input tax credit. Let's revise that. Okay, let's take a break and come back. All right. So let's revise input tax credit. Okay. So as you all know, this is a very important chapter for your examination. Okay, the topic called input tax credit. Okay, now okay, when you're revising this chapter, you have to understand that this chapter can be divided into three. This chapter is divided into three parts. Okay, the first part is related to the conditions for availing ITC. First part related to conditions for availing ITC. The second part is apportionment of credit and blocked credit. Apportionment of credit and block credit. From that viewpoint, the most important topic is basically blocked credit, not apportionment. For CA Inter, you have to focus a bit more on blocked credit. Okay, fine. Now, the third one you have to look at is credit in certain special circumstances. Okay, that is the third point. So, these are the three headings that you have to study under this chapter. Okay, fine. So, the first one we are going to look at is basically conditions. So, let's start with that. Okay, fine. Now, before conditions, there is a point called eligibility for availing ITC. That is actually very easy. For example, a person becomes eligible to avail ITC only if two conditions are satisfied or two criteria is met. First, he should be a registered person. Second, he should be doing business. So that's the eligibility part. I'm not discussing detail into the eligibility part, but I'm just reminding you, you can become eligible to claim ITC only if you are a registered person, plus you should have business intention. If these two conditions are satisfied, yes, great. You can actually claim ITC. Now the question is, what are the conditions to avail ITC? Okay, now the condition, basically there are 5 conditions. There are 5 conditions. Let's look at it one by one. The first case is basically the person should receive the good or service. Okay, let's take the second condition. The first condition is, it's easier to study in the particular order. The first condition is the person availing ITC should have a document, evidencing charge. A document evidencing charge. Okay, so what document can that be? This document can either be invoice. Okay, this document can either be invoice, it can be self-invoice, it can be debit note, okay, it can be bill of entry, it can be revised invoice, okay, it can even be the document issued by input service distributor. So if you have any of these documents, you can actually go and claim the ITC. Okay, it's an important topic. You have to have asked, for example, you do not have invoice, but you have delivery challan. Can you claim ITC? The answer is no, you cannot claim ITC. You can claim ITC only if you have any of these documents. Okay, fine. Now, again, there are some special points that you have to remember over here. For example, let me just take that chapter. Yeah, see, when you look at the invoice, as per section 31, there are certain data that should be mandatorily be included in the invoice. Okay, for example, when you look at section 31, they will give a list of items to be included in the invoice. But even if you do not have all those items, if these 5 items are present, you can actually claim the ITC. If these 5 items are present, you can actually claim the ITC. All right, so just make sure that you study these 5 items. Its amount of tax should be there. description of goods or service should be there, total value of supply should be there, GST of the supply and recipient should be there, place of supply should be there in the case of interstate supply. So if these many conditions are satisfied, yes, you can actually claim the ITC. Okay, so you have to understand that all the information given in invoice is not mandatorily required. At least have this, you can claim the ITC. Okay, fine. Now, so please remember that when you talk about invoice, all documents are not mandatory, all information is not mandatory. You should have minimum requirement. Then you can claim the ITC. All good? Okay, fine. Now, okay, like I'm audible, correct? And you can see the screen as well. Can you please respond in chat if it's okay? I'm audible and can you see everything? Yes, right? Okay, perfect. Just wanted to confirm that. Okay, perfect. Thank you. Okay, so let's continue. All right, so this is the minimum requirements that you're okay. Just please keep that in your mind. You have some minimum requirement. Only if you have that, you can actually claim the ITC. Okay, moving forward. Okay, thank you. Okay, moving forward. Next. So first condition was document evidencing charge of GST. The question is, what is the second condition? You should actually receive the goods or service. Now, when you study this, you have to understand a very important point. That is the first point here. They talked about document evidencing charge, right? Here, they are specifically asking you to have possession of document evidencing tax, which means you get the invoice, you should have the invoice with you to claim the ITC. If subsequently you lose the invoice, you cannot claim ITC. The ITC that you claimed, will have to reverse it if you have already claimed the ITC. Okay, because they are talking, you need the possession. But in the second point, they are telling you, you should only receive the good or service. You have the good or service with you, perfect, keep it with you. That's the second point, receipt of goods or service. All right, great. Now let's look at the third point. Okay, okay, here I will teach you one important point. What if the goods are received in lots? What if you are getting goods in lots? You can claim the ITC only if you receive the last lot. Claim the ITC only if you receive the last lot. Also, the another important point over here is in the case of bill to ship to mechanism. You remember what bill to ship to is, right? For example, there is A, B, and C. A ordered goods from B. All right, and A asked B to deliver it to C. So what happens is B will send the invoice to A but goods to C. This concept is known as bill to ship to. We already discussed this yesterday when we are looking at place of supply. We know that the place of supply in this case is the principal place of business of third person. We studied all that, right? All right. Now the question is, in the case given in the screen, can A claim ITC? Okay, so why are we wondering can A claim ITC? Because A have received only the invoice, A have not received the goods. Goods went to somebody else, right? The government says in bill to ship to mechanism, it shall be deemed. It shall be deemed as if A received the goods. It shall be deemed as if A received the goods. So which means A can claim the ITC. All good? Okay, so that's also done. So this is the second point, receipt of goods or service. This is additional points related to the second point. Okay. Now the third point is relatively very easy. The person claiming ITC should actually file a return. The person claiming ITC should file return. Okay. Not a very important condition, because only if you file 3B can you claim ITC. You can claim ITC only if you file 3B, right? So that's not a very important condition, but please keep it in your mind that that's the next condition. Okay. Now the fifth condition is that the supplier or the tax should be paid to government. Okay, now this is an important point, because who pays the tax? Because we know that most of the cases supply will be under forward charge. If it's under forward charge, supplier pays a tax. Very rarely it can be under reverse charge. Under reverse charge, the recipient pays. So here we are actually talking about the supplier paying tax to the government. If it's a reverse charge, the recipient pays. Okay, that's a very basic point. But if you have already studied payment of tax chapter, there's a rule called Rule 37A. I am clubbing that over here. Rule 37A. Okay, so what does Rule 37A say? Rule 37A says, even if the supplier is not making the payment to government, still the recipient can avail ITC, but the supplier should subsequently make the payment to government. At least by what date? Remember, the 30th September of subsequent financial year. Okay, so just writing it down over here. If you have a supplier, even if the supplier is not making the GST payment, still the recipient can avail the ITC. But the supplier should make the payment with at least 30th September of subsequent financial year. 30th September of subsequent financial year. Okay, only then the recipient can avail ITC. Now, even after 30th September, if the supplier is not paying GST to government, what should the recipient do? Recipient should reverse the ITC. Recipient should reverse ITC. Okay, within what date? Within 30th November. What happens if it is after 30th November? Recipient will have to reverse with interest. That. I hope you got the point. Let me quickly revamp that again. If you have a supplier and a recipient, the supplier should make the payment of GST to government for the recipient to avail ITC. For that, there's a cutoff date, that is 30th September of subsequent financial year. If the supplier makes a payment to government within the 30th September, the ITC available recipient is great, keep it with you. But if he is not making the payment after 30th September, recipient is in trouble. Recipient will have to reverse the ITC already availed. Recipient will have to reverse the ITC already availed. Now, within what date should they reverse? They should reverse within 30th November. What happens after 30th November? Then the recipient will have to reverse with interest. So from 30th September till 30th November, if you are reversing, you need not pay interest. After 30th November, it will attract interest. All clear? Perfect. So we're done with that. Okay. So this is the fourth condition, right? This was the fourth condition. Now, the fifth condition is relatively easy. The supplier should furnish GSTR 1 with that invoice. Only then it will come and hit the 2A, 2B of the recipient. Only then can the recipient claim ITC. So, for example, the chapter returns. We won't be discussing that much during the revision session. You'll have to look it. You will have to revise it on your own. But yeah, in the chapter there is a point called 2A, 2B, section 38. I hope you all know the difference between 2A and 2B. Make sure you are thorough with the difference between 2A and 2B. The 2A is a dynamic statement. It gets continuously updated. 2B gets updated only if the supplier files the GSTR 1 within due date. I hope you already know this. If that's happening, it will get hit in the 2B. Supplier filing GSTR 1 within due date. The return, if the supplier files it within due date, then the recipient's 2B will get hit. Only if the 2B gets hit can the recipient avail ITC. You already know this, but yeah, just quickly saying that. These are the conditions for availing ITC. These are mentioned under 16 subsection 2. 16 subsection 2. If these 5 conditions are satisfied, yes, the recipient can go and avail ITC. If any of these conditions are violated, recipient cannot avail ITC. 5 conditions will be cumulatively satisfied. They consistently ask this point for exam. Be sure that you thoroughly understand this. All right, fine. So now let me see what other points we need to discuss. So yeah, other important point regarding invoice. Okay. When we talk about invoice, please keep in mind that if the supplier has to do e-invoicing. So what is e-invoicing? If you look at the chapter called invoice debit note credit note, there's a point that if a person's aggregate turnover in a financial year, in previous financial year, exceeds 5 crore. Which financial year? In any of the financial year from 2017-18. If it exceeds 5 crore, e-invoicing is applicable to that person. If e-invoicing is applicable to that person should mandatorily follow the e-invoicing procedure. That QR code and invoice reference number should be there in the invoice. If those conditions are violated, then the recipient cannot avail ITC. For example, I am a supplier, you are my customer. I am supposed to do e-invoicing. Unfortunately, I am not doing e-invoicing. You will not be able to avail ITC. All right. So just keep that in mind. E-invoicing is a mandatory condition. Okay. They've already asked it for exam. Keep that in your mind. Okay. Discussed. Already discussed. Received lot. Okay. Now, this is a clarification. That's actually relatively a really interesting clarification. I'll explain this to you. Okay. For that, let me just show a quick example that will be easier for you to understand. Okay. See, let's say there's a company called Room. Example, and this company is a manufacturer of cars. Okay, I have another company here called Popular Room Cars. Okay, this company is a trader of room cars. Okay, fine. So now what happens is Popular Room Cars is actually running short of cars, so they are placing an order with Room, asking them, we need a couple of cars. As per the instruction of Popular Room, they are manufacturing a couple of cars. Now what happens is, to get this car, we should actually send a truck. So Popular Room Cars is actually getting a truck, and they are sending this truck all the way till the manufacturer. Manufacturer loads into the truck and it is bought back. Okay. The question here was really easy. When can you claim the ITC? Whether you can claim the ITC only when the goods reach the factory, like you're seeing the screen right now, or can you claim the ITC when the good is already collected from the manufacturer? I hope you understood the question. The government clarified you can claim the ITC in this situation where the goods are just taken into the vehicle. Okay, this is basically Ex Works contract where Room, the manufacturer, is only responsible for manufacturing the car and putting it outside the factory. The transportation is the responsibility of Popular Room Cars. So Popular Room Cars have already sent the truck to collect the goods. So if that happens, the moment the truck reaches Room and they collect the good, they can claim the ITC. It need not come all the way till here. You can claim the ITC. I hope that's fairly easy for you to understand. Now there's one more important point. The good, when it's moving from there till here, if there is an accident in between and the goods are destroyed, then you cannot claim the ITC. The ITs that you have already claimed, you have to reverse it because it's blocked. Keep that in your mind. Okay, so that's all about Ex Works contract. It's an important clarification. Okay. Okay, now, so just look at the conditions we have discussed so far. Whichever study material you're using, take a minute to quickly look at it. I think that's clear. Okay, fine. Now, if you look at the conditions that I've mentioned over here, you might notice that, see, I taught you 5 conditions, right? There are basically 5 conditions. Now, one interesting fact is, nowhere in this condition does it say that the recipient should make the payment to supplier for recipient to avail ITC. So, payment of consideration from recipient to supplier is not a mandatory condition for availing ITC. Even without paying, you can claim the ITC. But that does not mean you can never make the payment. The recipient has to make the payment within at least, do you remember, 180 days. 180 days from supplier's invoice. If the payment is not made within 180 days, then the recipient will have to go and reverse the ITC. Okay. Now, the recipient reversed the ITC. Subsequently, recipient, okay, when they're reversing, you have to pay interest. Recipient reversed the ITC. Subsequently, recipient is going and making the payment to supplier. Then what happens? Recipient can re-avail the ITC. Recipient can re-avail the input tax credit. All good? Okay. Now, so this is the basic concept. You have to make the payment in 180 days. This entire concept is not applicable. This is not applicable in 3 cases. So which all are those 3 cases? The first case is basically Schedule 1 transactions. What is Schedule 1? Schedule 1 is deemed supply. So we basically have 4 cases. In these 4 cases, even if there is no consideration, those transactions shall be treated as supply. We already know this. Yeah. So the point is actually really easy. Those 4 cases, we already know that there's going to be no consideration, right? Now can we say that the recipient did not make the payment to supplier? No. Recipient can avail ITC even if there is no payment. That is the Schedule 1 cases. Next is RCM cases, reverse charge mechanism. Okay. So under reverse charge mechanism, who pays the tax? Recipient pays the tax. So even if the recipient is not making the payment of balance amount to supplier, still recipient can avail the ITC, or the ITC avail can be retained. That's the RCM transaction. Okay. The next case is, I will just quickly mention section 15 subsection 2 clause B. Remember the third party payment we discussed yesterday in value of supply? So under 15(2)(b), the recipient makes a payment to a third party. The recipient makes a payment to a third party on behalf of supplier. So that payment will not go back to supplier because we already made that payment to third party. Got it? So even if that payment is not made to supplier, still recipient can avail the ITC. There is no issue. So please understand that only in these 3 conditions, government is not mandatorily asking you to go pay the supplier. Okay. In all other cases, the recipient should make the payment subsequently at least within 180 days. Easy. I hope that's clear. Okay. So whichever study material you use, just quickly read that point. Have a quick read. Revise it up. All good? Okay, so that's all done. Now, 16 subsection 3. Very easy concept. I'll quickly explain. This is related to depreciation. Okay. Imagine you bought an asset. So this is 16 subsection 3. Okay. Imagine you bought an asset. The asset, let's say, costs 10 crore with GST 1.8 crore. Example. Okay, so somebody has asked me a doubt. Again, there will be some delay within which you ask your doubt and I answer because of the relay. But okay, fine, you can ask me the doubts. Yeah, so the doubt that I'm asking is, like earlier we discussed about the manufacturer sending the goods, right? So the question is, yeah, this case, what if the trucks are being sent by the manufacturers? What if the goods are being sent by the manufacturer's truck? ITC can be claimed only when the truck reaches the recipient and they receive the goods. Okay, only when the recipient sends the truck, we can use the other provision. When the supplier itself is sending the truck, only when you receive the truck, you can claim the ITC. Okay, I hope that's clear. All right, so continuing. So I have an asset. The asset costs 10 crore and there's a GST element of 1.8 crore. So total I have spent 11.8 crores for this asset. I've spent 11.8 crores. Now the question is, in this case, when can I claim the ITC of 1.8 crore? Yes, you can claim the ITC. You can claim ITC. But after the entire financial year is done, you actually go and take depreciation, right, on this asset. When you're taking depreciation, please ensure that you're taking depreciation only on this 10 crore. Do not take depreciation on 11.8 crore. If you take depreciation on 11.8 crore, you're taking depreciation benefit on GST as well, which means ITC is not available. Simply put, you can claim the benefit of 1.8 crore only in one act, either GST Act or Income Tax Act. You either claim depreciation on 1.8 crore or claim ITC. Choose whichever one you want. So one line summary is, if you claim depreciation, you cannot claim ITC. Again, please be sure you understand that I'm not talking about taking depreciation on 10 crore. That you do whatever you want. You can claim the ITC, that's all. You can claim the depreciation, that's all fine. I'm talking about the GST element. Okay, I hope that's clear. All right. Now the next point is, do you have a time limit for claiming ITC? Do you have a time limit for claiming ITC? The answer is yes. But the important point is that time limit is applicable only for availing credit. It's only for availing credit. It's not applicable for utilizing. Once you avail, you can utilize whenever you want. The only question is, what is the time limit for availing credit? It's actually really easy. For example, there is a financial year in which you received the invoice or debit note. Okay, what you do is take the next financial year. Okay, the 30th November of this financial year. That is going to be the cutoff for claiming ITC of this invoice or debit note. Okay, look at the financial year in which you raise the invoice or debit note. The subsequent financial 30th November. Okay, it can either be 30th November or there is one more date. For example, for this financial year, you have to file something called annual return. If you file the annual return, the time limit has already expired, which means, simply put, these two dates, whichever is earlier. For you to understand that, I'm going to give you one quick example. Let us take a date, let's say 13th August, example. Okay, 2026. I'm raising an invoice in this particular date. Okay, and you are receiving this invoice. You're receiving this invoice and you're planning to take the ITC on this invoice. You have time till 30th November 2027 to claim the ITC. That's a one-line summary. Because this is the 30th November of the next financial year. What is the next financial year? 26-27. Sorry, right now we are in 2027, right? Sorry. Right now we are in 26-27. The next financial year is 27-28. Okay, it's going to be the 30th November of that financial year. That is going to be a cutoff date. And there's one more thing. For this financial year, that is 26-27, you are supposed to file an annual return. Imagine I'm going and filing that annual return on 15th July 27. Then this is the cutoff date, because this date or this date, whichever is earlier. Okay, imagine I'm going to file the annual return on, let's say, 15th December 27. Then this is the cutoff date, because that's the earlier date. So let me quickly summarize it. Do you have a time limit for claiming ITC? Yes, there is a time limit for claiming. Specifically, there's a time limit for availing ITC. There is absolutely no time limit for utilizing ITC. What is the time limit for availing ITC? It is the 30th November of subsequent financial year or actual date of filing annual return, whichever is earlier. Got it? As easy as that. Okay. Okay, I hope that's clear to you. And with that, we're done with the time limit. We're done with time limit. Okay, done. Now, there's an important amendment over here. Okay, that is 16 subsection 6. This amendment came couple of attempts back, not a new amendment. Okay, let me quickly explain that to you. So look at the screen, I'm going to show you some dates. Okay, this amendment or this section is actually related to revocation of cancellation. Revocation of cancellation. So imagine there's a person whose registration, okay, there's a person, one second. Sorry. Yeah. So let's take an example. There is a person whose registration was cancelled. Okay. When was it cancelled? Let's say it was cancelled on 31st August. 31st August. If registration is cancelled, you can actually subsequently apply for revocation. Okay. So this person applied for revocation, let's say on 30th September. Okay. The registrations, the cancellation was revoked on, let us say, 31st December. Okay. The revocation was approved on 31st December. Now the question was, okay, now the question was, in this particular case, when can you claim the ITC? Claim ITC of what? See, you have to understand something. Let us say you have an invoice. You have an invoice. You received this invoice on, let us say, 1st Jan 2026. So for sake of example, let's put all this 2026. Okay, let's say all this is basically 2026. Okay, now what happened was on 1st Jan 2026, you actually received the invoice. You forgot to claim the ITC. Let's say you missed it. So ideally, the due date for claiming ITC will be 30th November. But if you look at the example, you can see that on 31st August, this fellow's registration was cancelled. And that cancellation was in effect on 30th November, because 30th November comes in between this, right? Even on 30th November, this cancellation was still there. Which means, unfortunately, 30th November was the due date for claiming ITC. You cannot claim ITC on this particular date because you are not registered. Now, you got the registration back on 31st December, but by that time, the time limit has lapsed. Which means this will cause you considerable difficulty in claiming ITC for that invoice. I hope the idea is clear. So government says you do one thing. When you study revocation, you can see that when the registration is revoked, the government is actually giving you 30 days to file all the pending returns. Pending returns means it should be probable returns from 31st August to 31st December. So all the pending returns can be filed within 30 days. So section 16 subsection 6 says that the time limit for claiming ITC on this particular invoice is extended till this 30th date. Which means with 31st December, if you add 30 days, you will get it as 30th Jan. Okay, you have time till 30th Jan 2027 to claim the ITC with respect to this invoice. That is the point. So let's quickly summarize this again. If you get an invoice for which you are supposed to claim the ITC, but you missed it. Unfortunately, by the time of due date for availing the ITC, your registration was cancelled. Even on the date of even on the date of cancellation, even on the 30th November date, even on that particular date, your registration was cancelled. You are under unregistered situation. Okay, but in between there you had applied for revocation and you're getting the revocation. Government says after revocation, you actually have 30 days to file all the pending returns. we are extending that 30 days for you for availing the ITC as well. That it's as easy as that. But there's an important criteria on the date where they cancelled your registration. On the date where they cancelled your registration, on that particular date, the time limit for claiming ITC should not have lapsed. What do you mean by that? For example, in my example, your registration was cancelled on when? 31st August. So I am saying, hey, don't worry, the time limit is not over. Time limit is 30th November, right? But what if you go and file your annual return before this? What if you go and file your annual return before this? That is also a time limit for claiming ITC, right? Which means the time limit has already lapsed. Then you will not get this extended time limit. This is 16 subsection 6. I hope it's clear. To understand this, you should already have an idea regarding the revocation of cancellation as well. Okay, but yes, in whichever study material you follow, just read the provision. Oh, that's clear. Okay. Now, someone has even asked in the chat. It's a very simple topic. I'll just quickly go through that. That's basically there is something called self-invoicing, right? So the question was, if you're doing self-invoicing, okay, let's say you're doing self-invoicing, when can you claim the ITC? The provision said, look at the date when self-invoice was made. Okay, let's say I made the self-invoice today. Okay, if I made the self-invoice today on 13th August, which means you look at which date which financial year this 13th August falls into. So we already discussed it's under 26-27, which means the time limit for claiming ITC for this self-invoice is going to be 30th November 27. So the clarification specifically asks you to look at which date the self-invoice was made, consider that financial year. That's what the clarification is talking about. I hope that's clear. Okay, I hope that's clear. Okay, look at which financial year that self-invoice was made. Based on that financial year, look when you have to claim the ITC. Okay, that's it. So basically there was no clear idea what will the time limit for claiming ITC for self-invoice. There was no criteria to look at when the ITC can be claimed for a self-invoice. Process is very easy. Look at the self-invoice date. Whichever financial year is that, take the 30th November next financial year. Okay, I hope that's clear. Okay, so with that we are done with all the conditions for availing ITC. We are done with all the conditions for availing ITC. Okay, fine. Next, we are done with section 16. We are moving on to section 17. Okay, section 17 is talking about apportionment of credit and block credit. The first part is apportionment. That is actually relatively very easy. I'm just going to quickly run through that. Listen to me carefully. Okay, apportionment. As I told you, apportionment is not very important. The block credit part is more important. Okay, apportionment is not the important part. It is the block credit part that is much more important. So what is apportionment? It's very easy. Imagine you have some input supply. Imagine you have some input supply that you use both for your personal purpose or non-business purpose and business purpose. As you know, you can claim ITC only if you use for your business purpose. This is allowed, this is not allowed. Easy. Now, in the business purpose itself, you are using it for your taxable purpose, exempt purpose, and zero rated supply purpose. Use for these three purposes. Okay. So the question is, can you claim the ITC? You can claim the ITC only when it is used for taxable supply or zero rated. For exempt supply, you can claim the ITC. So simply put, any supply you use for your exempt supply, ITC cannot be claimed. Easy. I will give you one more tip. This tip is proportionately divide it. And whatever proportion comes for proportionately divide it. And whatever proportion comes for taxable supply, you claim the ITC. Exempt supply, you cannot claim the ITC. The question is based on what proportion? Based on your taxable turnover to exempt turnover. Taxable turnover to exempt turnover. Okay, for that, let me give you a simple example. Let us say there is a supplier. This supplier is providing a supply to this recipient. Okay. Okay. This recipient has taxable supply and exempt supply. Okay. Let's say taxable supply, the turnover is 3 crores. Exempt supply turnover is 1 crore. Example. Okay. What happened was he actually received some ITC. The ITC was, let us say, 40,000 rupees. And this ITC was used for both taxable as well as exempt supplies purpose. That input supply was used for both these purpose. The question was, how do you claim the ITC? Take proportion. What proportion? Divide into 3:1, which means you take the 40,000 rupees and you divide that into 3:1 proportion, which means you will get 30,000 and 10,000. The proportion says you can claim the ITC of 30,000, you cannot claim 10,000. That's it, as easy as that. Actually, you have to understand that you claim the entire 40,000 and you reverse 10,000. That is the actual procedure. Not very important for CA Inter. For Inter, just understand that this is what you do. Okay, I hope that is clear. Okay, all good? Perfect. Okay, so that's all about that's all about this particular point. Now let's see. Okay, now there's one more important point. When you look at apportionment of credit like this, there is one entity that's having a big headache. Who is that? That is bank. Why? When you look at banks has a predominant issue. The bank's major income is basically interest. As bank's major income is interest, this interest is basically exempt under GST. Okay, let's say, for example, a bank for a particular month, they have a turnover of, let's say, 10 crore. Out of the 10 crore, 9 crore will be, let us say, interest. And the 1 crore is other supplies. You can understand what the issue is, right? Because if you proportion by 9:1, major chunk of ITC will lapse. You will not get. So government says, don't worry, we are going to give you a special provision. For banks and NBFCs, just them, they can actually claim 50% of eligible ITC. Eligible means ITC that's not used for personal purpose, ITC that's not used for block, ITC that's not blocked. Other than that, whatever else ITC you have, you can actually claim it. But only 50%, not the full. So if you look at this proportion, 90% of ITC will go. But this is much better, you will get 50%. Okay, that is 17 subsection 4, the second option available for banks. But there also you have to be very careful about one provision. We told that 50% of ITC is available. But if this ITC is coming from a distinct person, which means one bank is providing to one branch of a bank is providing to another branch of a bank, distinct person, 100% ITC can be claimed. ITC is restricted to 50%, but if it's coming distinct percentage, 100% can be claimed. I hope that's clear for you. Okay, so whichever book you are following, just read that. I'm just going to show a small chart over here. This is a chart. Please keep in your mind, this is an option for banks. Banks need not mandatorily follow this. They have option. Just look at it. All good? Okay. All right, I'll give an example for that. Okay. You can look at the screen. I'll just run a quick numerical example over here. See, I'm taking the example of ICICI Bank. Okay, ICICI Bank is located in Chennai, and in the month of January, their interest income, let's say, is 1.8 crore, and their other income is basically 20 lakhs. Okay, so we know that interest income is exempted, other income is actually going to be taxable. Okay, fine. Now, the tax is going to be at 18%, which means it's going to be almost 3.6 lakhs. Now, let's say they have multiple ITC. Their ITC on input service, let's say 1.8 lakhs. The capital goods is, let's say, 2.4 lakhs. The input is going to be 5,000, example. Okay, which means total ITC available is basically 4.25 lakhs. You can just start at 4.25 lakhs. Now we can say that this 4.25 lakhs ITC cannot be completely claimed by this bank because they have more taxable supply and exempt supply. Right. So what do? We have to apportion it. That 4.25 lakhs should be apportioned between the 1.8 crore and 20 lakhs. Okay, fine. So when you apportion it, what happens is you can see over here, this is the amount you can actually claim. Just quickly run through that example. Just type in your calculator and see. Basically, you apportion the 4.25 lakhs. 4.25 means this 4.25, total 4.25. Okay, take 4.25 lakhs, apportion between 1.8 lakhs to 20,000. Okay, you do that, what happens, you can claim the ITC. What is ITC you get? You get at 42,500. That is only ITC you can claim. The balance will lapse. Okay, fine. This is the basic concept. Now I told you, as per the revised provision, they can actually claim 50% of ITC. So claiming 50% of ITC, that is under method 2. If you're claiming 50% of ITC, what happens is the eligible ITC is 4.25 lakhs and 50% can be claimed means you can claim basically 2,12,500. Which means the GST payable will be, the output tax is 3.6 lakhs, reduce 2.12500 from that, you get GST payable as 1,47,500. I hope this is clear to you. Right? Just look at the numericals for a second. Just see if it's all clear. I hope you got that. Now let me answer your question. Give you an example of the 100%. See, in the same story, okay, let's take the example of ICICI Bank. Okay, we told that their ITC is these amounts, right? 1.8 lakhs, 2.4 lakhs, 5,000 rupees. Okay, so total ITC was basically 4.25 lakhs. Okay, but you look at that input service 1.8 lakhs. Out of the 1.8 lakhs, let us consider 45,000 ITC actually came from ICICI Bank Kochi. Some consultant advisory service. It came from Kochi. The balance 1.35 lakhs came from other suppliers. So we have already seen that out of the 4.25 lakhs, you can claim only 50% ITC, correct? But for that 45,000, you can actually claim 100%. Which means your total ITC was what? 4.25 lakhs. Out of that, 45,000 can be claimed 100%. The balance ITC is restricted. Which means take the 4.25 lakhs, reduce 45,000, balance is basically 3,80,000. 50% of 3,80,000 can be claimed, which means the total ITC claimed is 2,35,000. This is the example of that 100% being claimed. Just look at the figures and see if it's clear. Okay, I hope that's clear. So with that, we are done with 17 subsection 4. Okay, now we move on to the next important topic, and that is basically blocked credit. Okay, blocked credit. Okay, now this is basically where this chapters is most commonly tested, the credit that is blocked. Okay, let's do one thing. Let's take a 10 minutes break. We'll come back after the break and look at this chapter. Okay, let's take a 10 minutes break. All right. Now let's look at this topic called blocked credit. Okay, fine. And now when you're talking about block credit, so what do you mean block credit? It's a case where ITC is not allowed at all. Okay, it's a case where ITC is completely not at all allowed. Okay, fine. When you look at block credit, I'm going to give you some case by case explanation. The first thing we're going to look at is motor vehicle. Okay, motor vehicle. So I want you to go and study the definition of motor vehicle. That's important. Okay, motor vehicle. Why are you looking at motor vehicle? The motor vehicle, you have to understand that you have to look at the seating capacity. Seating capacity. I'm dividing it into two. Okay, on the left side, I'm putting it up to 13. Okay, 13, up to 13. The next one is 13 and more than 13, up to 13 and more than 13. Okay, fine. So the provision approved seating capacity not more than 13%. Okay, so which means if it's not more than 13%, it's actually 13%, it's actually going to be blocked. Okay, up to 13 is going to be blocked. If it is more than 13, ITC is allowed. This is the basic concept. So simply put, ITC on buses allowed. Okay, cars blocked. Seating capacity up to 13 is blocked, more than 13 is allowed. That's the basic concept you have to remember. Now, when I talk about this, there's a quite common doubt I get. What about trucks? Truck ITC is allowed because motor vehicle for transportation of passengers. Motor vehicle for transportation of persons, specifically for transportation of persons. This is the blocked point, which means please keep in your mind that truck is allowed. Truck ITC is allowed. Okay, fine. So far, I hope it's clear. Now, I told you up to 13 is blocked. Now, for such motor vehicle, if you're doing any kind of repair, okay, or maintenance, okay, or servicing or insurance, all that is blocked. So you have a blocked vehicle. For that, if you're doing repair, maintenance, service, etc., is going to be blocked. So I understand that there are certain vehicles that is allowed, right? For example, more than 13 is allowed, truck is allowed. Those cases, repair, maintenance, service, everything is going to be allowed. Only in the case of blocked vehicles, all these ITC is blocked. Now, imagine you are not buying this vehicle, you are just leasing this vehicle. Or you're leasing or you're hiring. This is also blocked. So if you have a car, you are just leasing that car. I mean, you do not have a car, you are leasing a car from outside. The ITC is going to be completely blocked. So I hope this part is clear to you. Now, please understand that all these things will be allowed if the vehicle seating capacity is more than 13. All right, fine. Now you have to understand that even if the seating capacity is up to 13, let us say seating capacity is up to 13, we said it's blocked, right? But in following three situations, it is allowed. In the following three situations is allowed. So the question is, what are three situations? Situation number 1, when it is used for further supply. What do you mean by that? If you're a person trading cars, you can claim ITC of the cars you purchase. Further supply is allowed. Next is transportation of passengers. Transportation of passengers. What do you mean by that? For example, taxi service, tour operators, they can have an ITC. The last one is imparting training on driving such motor vehicle. What do you mean by that? Driving schools, they can claim the ITC. So these three entities can claim the ITC. All good. Now comes the next important question. These three entities can claim ITC. Now, what if they are not purchasing it, they are hiring it. Yes, they can claim. Okay. And next case is, what if they purchase? What about the insurance, repair, maintenance? Yes, they can claim. So this is the basic concept of motor vehicle. I hope that is clear to you. It's very easy to understand. I'm just quickly revising it. Now, once motor vehicle is done, the next thing you have to study is aircraft or vessel. The interesting part is aircraft or a vessel ITC is blocked. That's the predominant part. ITC is blocked. You cannot claim the ITC. Even if you're repairing or let us say you're having service, insurance, all the ITC is going to be blocked. Now, when can you claim it? You can claim the ITC only when it is used for 4 purposes. You can claim it. You know which are the 4 purposes? The 3 are the one we already saw in motor vehicle. For example, the first one is further supply. The first one is further supply. The second one, transportation. The third one, imparting training on flying such aircraft or navigating such vessel. For example, flying schools or maritime academies. They can claim the ITC. And the last one is transportation of goods. So in these 4 cases, aircraft or vessel ITC is allowed. I hope that's clear. Okay, perfect. Set. So now the other points are exactly same as motor vehicle, because I told you the life insurance etc. is usually blocked. Sorry, not life insurance, the vehicle insurance, right? The vehicle insurance is usually blocked. Okay, but if you're using for these 4 purposes, you can actually claim the ITC of insurance, service, repair, everything. And such aircraft or vessel ITC is blocked. What if you are leasing them? That's also blocked. But for these purposes, it's allowed. So aircraft or vessel is very easy to understand. It's predominantly blocked but allowed for all cases if these are the 4 activities. Okay, that's all done. So whichever study, so the students who follow my study material, they have a detailed chart. I'm not showing that chart on the screen because it's a bit more complicated to explain. But as for the revision is concerned, I'm just quickly giving you the ideas. So whichever study material you follow, look at the chart. Look at the chart for both the aircraft and vessel. Just quickly revise, see if it's all fine. Good. Now, the next point we have to learn is, see, the insurance, repair, service for aircraft, vessel, motor vehicle. You already know when this is allowed and when this is blocked. We already learned. But as an additional point, these 3 is allowed to the manufacturer. Let's say this is a car manufacturing company. They're manufacturing car and they are insuring it. They can claim the ITC. So please understand, insurance, repairs and service is allowed to the manufacturer of aircraft, vessel or motor vehicle. It's allowed for them. Clear? Now, it's not just for the manufacturer. It is also allowed for the insurance company. What do you mean by that? For example, let's say I bought a car. I cannot claim the ITC. ITC is going to be completely blocked. Okay. Now, what happens is, after buying this car is meeting with an accident. Let's say there's some repairs and maintenance cost. I cannot claim the ITC. ITC is blocked. You already know this. But if the car is insured, all this repairs and maintenance service will be taken care of by the insurance company, right? That insurance company can claim the ITC. I cannot claim, insurance company can. Understand that point? Okay, so just keep that in your mind. Okay, done. Here there is an important clarification. Whichever study material you follow, you'll have the clarification over there, and that clarification is regarding demo cars. Okay, what is the clarification about? See, for example, imagine you are a company trading cars. You're a company trading cars. You will buy one car for as demo car. For example, the customer will come drive that car and decide whether they have to buy the car or not. The question was, can you claim the IDC of demo car? There is a clarification. Government says that yes, you can claim demo car. ITC can be claimed. Why? Government says only by driving that demo car can someone decide whether the other car should be purchased or not. So yes, you can claim the ITC of demo car. All right, perfect. I hope you clearly understood that particular point. Okay, let's continue. Now, the next important block credit is regarding works contract. Okay, works contract. Actually, works contract and self construction, I'm going to teach it together. Self construction, goods or service. What do you mean by that? See, when I'm constructing an immovable property, I have two options. One, to construct that immovable property, I can avail the service of a works contractor, or I can buy the goods separately, service separately. Whatever be the case, works contract or self construction, this is going to be blocked. That's the first point. Which means if I am constructing a building, for constructing that building, I am availing the service of works contractor, ITC is blocked. Or I am not availing the service of works contractor, I am buying cement or building material, ITC is blocked. Architect service, blocked. Design service, blocked. Any service that I take, ITC is going to be blocked. Okay, as long as I am constructing an immovable property, ITC is blocked. That's the first point. Now, can this be allowed? Yes. When? If the expense is, not capitalized. For example, I am buying I am availing works contract service to construct something, and I am not capitalizing the expense. So you might be wondering, how is that possible? If you are constructing any kind of major buildings, you will capitalize it. Let's say I have a flat, I have a building, and there are a couple of tiles. The tiles broke. To repair that, I am availing works contract service. If 2 or 3 tiles break, will I capitalize the expense? No, I'll put it in my P&L. I can claim the ITC. Now, instead of taking works contract service, imagine I am just taking repairs and maintenance. I am just buying the tiles. I am buying the tiles and availing separate repair service. It's again allowed, because I'll be putting it to my P&L account. Only if it is capitalized, ITC is blocked. You put it to P&L account, ITC can be claimed. Okay, fine. The next thing. So, expense is not capitalized, ITC is allowed. The next thing that I wanted to understand is, what if you are constructing a plant and machinery? ITC is allowed. Okay, if you're using the works contract service for the construction of a plant and machinery, a big machine, ITC is allowed. It can be works contract, or you can take the good and service separately, does not matter. ITC can be claimed. Okay, all good? Perfect. Now, what about the structural support of plant and machinery? For example, there's a plant and machinery, there's a structural support. The support on which the plant and machinery is kept. Okay. Again, as I already told you, this is a revision session. I'm not showing you examples for any of these things. So in my usual class, you know that we'll be looking at detailed examples and stories for each of the stories. Now I'm just going to the summary provision so you can quickly revise. If I go with the entire example set, because we have detailed PPTs for that. If you go for the entire example set, it's going to take such a long time. So I'm just cramming it all in the time we have. So I'm saying plant and machinery is blocked. Its structural support is allowed. I'm sorry, I said plant and machinery is blocked, right? Sorry. Plant and machinery is allowed. Even its structural support is allowed. All right. But you cannot claim the ITC of building. Okay. Any building or civil structure. Okay. Any big building or civil structure, ITC is actually blocked. Okay. Now two important points. One is telecommunication tower. Telecommunication tower. ITC is blocked. Telecommunication or ITC is blocked. Okay. And next is pipelines laid outside factory is blocked. Which means if it's inside factory, it's allowed. Okay, fine. So keep all this in your mind. Now another important point over here is, imagine there's a person called ABC. Okay, ABC is availing works contract service. We'll immediately say, sorry, ITC is blocked. But we came to know that ABC is availing works contract service because they are providing works contract service. So this was a subcontract. ITC is allowed. So basically, works contract, ITC is allowed for works contractor. So ABC is a works contractor. They are providing works contract service outside. To provide this, they took works contract from outside. They can claim the ITC. Clear. Similarly, let's say ABC is providing works contract. To provide works contract, they are taking good or service from outside. ITC is allowed. Usually, if you're taking good or service for construction of immovable property, ITC is blocked. But if you're a works contractor, meaning you are not constructing for your own purpose, you are constructing for somebody else, you can claim the ITC. Okay, so that's all about works contract and self-construction of immovable property. So let me quickly explain this entire portion again. See if it's all clear to you. All right. Okay. So how did we start? Works contract ITC is blocked. Works contract ITC is blocked. Self-construction blocked. Can you claim the ITC in any situation? Yes. If the expense is not capitalized, you can claim ITC of both works contract and goods or service for self-construction. It can be claimed. Now, so that's the first one. Next, if you are constructing a plant and machinery, you can claim. Even the structural support you can claim, but do not claim any building, civil structure, etc. Do not claim over that. Okay. Now, what about pipelines? Outside the factory blocked, inside the factory allowed. Telecommunication tower blocked. Okay. Now, what if I am a works contractor and I'm taking works contract outside? You can claim the ITC. What if I'm constructing the building for someone else? Basically, I'm a works contractor, and for that I'm taking goods or services from outside. I can claim the ITC. As easy as that. So I hope that's clear to you. I think I hope the revision is thorough. Again, I told you in the first class, basically yesterday, this is not somewhere where you can come and study this provision from scratch. If you have absolutely no idea about these provisions beforehand, this class is not going to help you. Because usually when I teach works contract, what I do is I first give a thorough expression what works contract is, show numerous examples how works contract works, then I'll give you some numericals regarding works contract, then we'll say it's blocked, then I'll show examples for each and every case. So that's not practically possible for a marathon revision session. Here I'm just quickly revising. So I'm hoping that you're understanding this. You can understand this only if you have a basic idea regarding this beforehand. If you have absolutely no idea, you're starting from the scratch, it's going to be a bit tricky for you to follow with me. Other than that, I hope it's clear. I hope it's clear for you. We have thoroughly understood what is works contract and self-construction. When it is blocked, when it is allowed. Good. Let's continue. So these were all the charts that I usually show in class. Okay. Let's skip through all that. Directly move on to the next point. And that is this. So I've given you some services on screen. All these cases ITC is blocked. Food and beverage, blocked. Outdoor catering, blocked. Beauty treatment, blocked. Health services and cosmetic and plastic surgery is blocked. Life insurance, health insurance is blocked. All these services are going to be blocked. So some students suddenly seeing that life insurance, they can ask me, see sir, life insurance is already exempted. So why do we say it's blocked? So just before, when we looked at life insurance, please remember, life insurance is blocked as long as it's not group insurance. If it's group insurance, it's taxable. So if a company is availing insurance service for all their employees. It's a group insurance, right? ITC, is that taxable? Yes, it's taxable. It's not for individual, it's for a group. It's going to be taxable. But unfortunately, that insurance company cannot claim the ITC. Okay, done. Now, next. So these cases are blocked. I hope it's clear. Next, this is also blocked. Membership of a club, health and fitness center is blocked. Travel benefits extended to employees is also blocked. So if you're taking a membership in a club, you cannot claim the ITC. If you're giving travel benefits to your employees for going to their home, or let's say for vacation, you're taking them for vacation, ITC is going to be completely blocked. Clear? All right. Now, can this ITC be claimed? Yes, it can be claimed at one situation. For example, this case, it can be claimed if your output and input is same line of business. What do you mean by that? I am a person providing catering service. And to provide that catering service, I am taking catering service from outside. I can claim the ITC. You understood the concept? I am a person providing catering service. To provide catering service, I am taking catering from outside. I can claim the ITC. All right. So that's what's written over here. If you can please read this. Sorry. All good? Okay. Now, all these services, ITC is allowed in one more situation. For example, we just discussed that these both credits are blocked. Okay, we discussed these both are blocked, but both of them will be allowed in this case. It's an important point. When an employer provides this to employee under statutory obligation. For example, there is under Factories Act, there is a provision that a factory should mandatorily have a canteen. For that, if they are purchasing food from outside, yes, ITC can be claimed because it's not a corporate policy, it's a requirement of law. Just keep that in your mind. ITC is going to be allowed. Clear? Now, I actually missed one important point over here. That is this point. Please read this point. This is also important. Got it? See, usually when, for example, I am an employer or my employee, you guys need a car for meeting the clients or something. For that, I am going and hiring a car, renting a car, and I am giving it to you. ITC is blocked. But if there is a statutory obligation that mandates I should compulsorily give you a car, for that, if I am going and renting a car, ITC can be claimed. Got the idea? ITC can be claimed. So that's this particular point. Please keep that in mind. Just missed that when I was talking about the block credit. Let me see if I missed anything else important. All these are done. Okay, done. Okay, now some other important block credits, and with that we can wrap with block credits. The next point is This is not that important. Okay, inward supplies charged under combustion levy is blocked. Of course, under combustion levy, we do not collect GST from the customer. Right? Make sure you thoroughly look at combustion levy. You have to revise it thoroughly. It will not be part of our marathon session. The weightage is not that high, but yeah, please look into that. Okay, so this combustion levy, yes, if you are paying any GST under that, ITC cannot be claimed. The next one is this. Okay, this is an important point. I'll explain this to you. For example, let us say there is a NRTP. Okay, so who is an NRTP? Non-resident taxable person. I hope you know the difference between NRTP and CTP. CTP is coming from another state. NRTP is coming from outside India. Please make sure you study the chapter registration for understanding all this. NRTP, CTP. Okay, fine. So for an NRTP, registration is mandatory, right? So as an NRTP, this NRTP after coming to India, he's buying some goods from India. He's getting some services from here. He's importing some service. He's importing some goods. The one line summary is very easy. Blocked, 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 allowed. So for an NRTP, ITC can be claimed only when they are importing goods. All other cases, ITC is blocked. All other cases, ITC is going to be blocked. And I hope that's clear. Okay, fine. So just quickly look at that portion. Good. Okay. Now, this is an important entry already tested for examination. So you know that under section 135 of the Companies Act, certain companies are supposed to do CSR activities, corporate social responsibility activities. So when they're engaged in corporate social responsibility, for doing that, they'll have to take a lot of input supplies, right? This is blocked for all those input supplies. So if you're under corporate social responsibility, for that, if you take any supply from outside, ITC is blocked. Okay, easy. Similarly, if you're using any input supplies for personal consumption, ITC is blocked. Not a very tricky point. We already know this. You cannot claim the ITC. Now we are specifically saying it's going to be blocked. This is also an important point. If there is any free samples, you give us free sample, or goods are lost, stolen, destroyed, written off, it is going to be blocked. Okay, so earlier this was once asked for CA examination. For example, you bought a car. Okay, a car trader bought a car. All right, now what happened was this car was using for trading purpose. Okay, demo car, can you claim the ITC? Yes, you can claim. But unfortunately what happened was one of the potential customers, while driving this car crashed. Then their car got destroyed. Can you claim ITC? No, because ITC is blocked. So demo car ITC can be claimed, but if that car is destroyed, ITC cannot be claimed. Similarly, earlier I told you, when the goods are being transported under X-Works contract, I told you even when the goods are under the control of transporter, I can claim the ITC, or the vehicle, I can claim the ITC. But while the goods are being moved from that location to here, in between, if the goods are getting destroyed, ITC is blocked. All right, keep that in your mind. All good? Done. Now, yes, with that, we are done with section 17. The entire block credit we have completely covered. I hope that's clear to you. Make sure that you thoroughly study this block credit. There are a couple of clarifications along with this. All are very, very easy clarification. I want you to thoroughly look. For example, I'll give a good clarification. For example, see, when I'm giving a good as free sample, ITC is blocked. When I'm giving a good as free sample, ITC is blocked. But if that is a supply under schedule 1, ITC is allowed. Got the point? I'm giving a good to you under free sample. Free sample, ITC is blocked. But if that free sample becomes a supply under schedule 1, it is a supply. Then I can claim the ITC. Got it? Just keep that in your mind. It's important. Okay. There's such clarification. See, once you're thorough with the provisions, the clarifications become much more easy. What I'm trying to tell you is, please make sure you study all the clarification notification. Do not miss anything. Okay. Anything given as clarified, please make sure you learn that. Okay, done. All right. So let's do one thing. ITC is not done. There are a little more portion that I want to explain to you. Let's take a break of almost 30 minutes for our lunch. Okay. So after the lunch, I'll be coming back. We'll be continuing the session. Okay. I would like to give you some more topics I would like to discuss with you. Okay. In ITC as well. And so once we are done with that, we'll actually break. Okay, we'll stop the session after that. So right now we're going to take a break of 30 minutes. We'll be back in 30 minutes. Okay, let's get back to the session. Okay, I will give you a question. Just try to do that. It's related to ITC. Okay, so just try to do this question. Okay, it's a very easy question. Siddhi Limited is a registered manufacturer engaged in the taxable supply of goods. Okay, they purchase the following goods in the month of January and they're asking you to identify what is the total ITC available. Okay, first case, goods purchased on which depreciation has been taken on full value including IT input tax. Can you claim the ITC? No. Okay, you cannot claim the ITC because the depreciation has been claimed on input tax as well. That's a violation of 16 subsection 3. ITC cannot be claimed. Goods purchased from Revi traders. Invoice of Revi traders is received in the month of January, but goods were received in the month of March. Can you claim the ITC? Right now, we are talking about the month of January. We received the invoice, but goods has not been received yet. ITC cannot be claimed. Next, car purchased for making further supply of such car. Such car is destroyed in an accident while being used for test drive by potential customers. This is the example we discussed in class. Okay, can you claim the ITC? No. Okay, because see, test drive is fine. Basically, demo car is fine. You can claim the ITC. But here the issue is this car has been destroyed, so ITC cannot be claimed. Goods used for setting up of telecommunication tower being immobile property. ITC is blocked. ITC is blocked. Goods purchased from Pooja Limited. Full payment is made by Siddhi Limited, but tax was not deposited by Pooja Limited. So supplier has not deposited tax. Can you claim ITC? We can take two views regarding this. The first view is very simple. Now ITC cannot be claimed because supplier did not pay tax to government. That's easy solution. Or we can even go with the secondary answer where yes, recipient can avail ITC, but supplier should make the payment of GST within subsequent September and all. Okay, but the easiest answer will be ITC cannot be claimed because supplier did not pay GST to the government. Truck purchase for delivery of output goods. Can you claim ITC? Yes. When you are purchasing truck for transportation of goods, okay, only transportation of persons, motor vehicle for transportation of persons. That's the only case ITC is blocked. ITC is allowed. Easy case. All right. Now let's look at another question. Okay, I'm giving you some cases on screen. Okay. Okay, actually, the question is in the next page. This is the main question. So I want you to first read this point. Please read this. There is no crucial information over there. They're just asking you to compute the total eligible ITC. Okay, fine. So what I want to do is just look at this, read one by one. This was asked for 2025 September. Look at it one by one. Try to identify where ITC can be claimed and where it cannot be claimed. Just look at it. I hope you're done. So let's just quickly look at these questions. Let's look at one by one. The first case, okay. As per the policy of the company, the managing director of the company has taken membership of local sports club on behalf of the company. Okay, now the question is, can you claim ITC for this amount? The answer is no, because membership of club ITC is completely blocked. Okay, it's completely blocked. See, if it's a statutory obligation and employer provides the employee, that you can claim the ITC. But here they say it's the policy of the company. That doesn't matter. ITC cannot be claimed. Next is purchase of OEM as an ex-works contract. So if you read that entire point, this is the example we discussed regarding that motor vehicle, the transport of motor vehicle under ex-works contract. So we already discussed that when the goods are handed over to the transporter, immediately we can actually claim the ITC. It shall be deemed as if the person received the goods. So here ITC can be claimed. Okay. Next question. On 5th year of its incorporation, they have arranged an event management act. Sorry, they have arranged an event from Daksh Event. So these guys are providing basically event management. They are charging a single price of 2.5 lakhs, which includes 40,000 as food. Okay, usually for food ITC is blocked, but we know that when we're taking this event management service, that entire event management shall be treated as one single packet. It should be treated as one single packet. So what happens if it's one single packet? It's a composite supply. Composite supply shall be treated as principal supply. What is the principal supply here? Event management. Event management IDC is blocked? No, IDC is allowed. So you can claim the ITC. It's very easy. This 2.5 lakhs, against that the ITC can be claimed. Next, you purchased a truck for transport of goods. Okay, and you have actually claimed the depreciation. You've claimed the depreciation of only 14 lakhs. So you have to understand that the assets value is 14 lakhs. GST is extra 28%. This person has claimed depreciation only on this 14 lakhs. So can you claim the ITC? Yes, no worries. ITC can be claimed. Okay. So I hope you clearly understood these provisions. Okay. With that, we are done with that. So I hope that you have an understanding regarding input tax credit. So now what I wanted to do is, see, I'm going to wrap input tax credit over here. Okay. There is section 18 under this chapter. Section 18 is not consistently tested for examination. So I will not be discussing that provision in this revision session. Okay. The provision section 18, I won't be specifically discussing over here, that you can do also as per your, in the class we have already covered that section, but for your revision session, you can do it on your own. Section 18 basically talks about credit in certain special circumstances. Okay. So there are some special, for example, you're a person, your supply was exempted, it becomes taxable. Or you are doing taxable supply, it became exempted. Okay. So those things I would suggest that you actually revise it on your own. Okay. Even if you look at exams, it has been tested, but not tested as consistently as other provisions. Okay. So you can revise section 18 on your own. So using the remaining time, I would like to quickly revise the chapter registration for you guys. Okay. So let's add one more chapter to our marathon session. Let's quickly revise this chapter called registration. So I'll be giving you important tips and what all to be revised, etc. under registration. So please ensure that section 18 you revise on your own. Let's move on to registration. Okay. So in this chapter called registration, what all sections are to be looked at? Okay. Registration, basically you have to look at section 22 to 30. Out of this, 22, 23, 24. These three sections you should be thorough, because these three sections actually discuss when you're supposed to get registered. 22, 23, 24. So once you're done with this, you have a clear idea when you should get registered. Then 25, 26, 27 talks about procedure for registration, comparatively not as important as 20, 24. But yes, study 24, 27. The last 28, 29, 30, this is the end part where we discuss about amendment and cancellation of registration. That's the last part of. Okay. So let me see what all we can discuss in this class. First, let's study section 22. Very important section. Section 22 says that if your aggregate turnover exceeds the threshold limit of 20 lakhs, you have to get registered. So what you should do, you should study how to compute aggregate turnover. So I've given the definition of aggregate turnover. Whichever book you follow, you'll have the definition. I'm just showing it over here. Here you have aggregate turnover. Okay, so we have given what all are to be included when you're computing aggregate turnover. Okay, when you're computing aggregate, somebody have asked me that depreciation portion. Okay, this last question, right? So this question, what happened was, see, the assets value is 14 lakhs. Okay, you purchase asset for 14 lakhs. There's a depreciation. When you're claiming the depreciation income tax, you have claimed depreciation only on this 14 lakhs. You have claimed depreciation only on 14 lakhs. You have not claimed depreciation on the input tax portion. So the provision says you can claim the ITC. You can claim the ITC. Okay, I hope that's clear. Okay, so getting back. Okay, so this is the computation of aggregate turnover. Okay, you have to study this computation of aggregate turnover. Here we are looking at what all are to be included in the definition of aggregate turnover. So we have given, if you have any taxable supply, exempt supply, export, interstate, outward RCM should be included. Okay, what are to be excluded? GST and inward RCM are to be excluded. Okay, so make sure that you practice sufficient question computing aggregate turnover, because there are questions where they specifically ask you to compute just aggregate turnover. Okay, example. See, look at this question. Okay, this question is a company, is a person. He started his business in the month of February in the state of Orissa. He provided the following information. From the above information, compute aggregate turnover. It's a very common question that they ask. So just quickly look at this and just try to identify how to compute aggregate turnover. Outward supply of petrol. Do we include that? Yes. Transfer of exempt goods to his branch in Rajasthan. Do we include that? Yes. Exempt supply is also part of aggregate turnover. You have to add it. Outward supply of taxable goods by his branch in Uttar Pradesh. Do we add it? Yes. The reason for that is this point. Okay. When you're computing aggregate turnover under your PAN, if you have business in any state in the country, you have to consider all those together. So that's how we compute the aggregate turnover. So yes, you have to add that. Okay, done. Outward RCM, supply of services on which tax is payable under RCM by the recipient. Outward RCM, yes, is part of your aggregate turnover. Even though the GST will be paid by the recipient, it is your supply. Yes, it should be added. Inward supply of services on which tax is payable under RCM. This will not be included. Okay, this is how we compute the aggregate turnover. So when you compute it, you will get 4 plus 2 plus 5 plus 6. You have 17 lakhs. 17 lakhs is going to be your aggregate turnover. Okay, but here they are asking whether this person is liable for registration. Immediately we'll be thinking, oh, it is less than 20. This person is not liable for registration. But there's a catch. You know what? This person is involved in inward RCM. So what happens if you're included in inward RCM? Registration is mandated under section 24. We'll just quickly revise that all those now. My main plan is to quickly make sure that you study 22 to 24. Okay, so let's come back. So this is how we compute aggregate turnover. So when you're studying this chapter, please make sure that you thoroughly analyze how to compute aggregate turnover. Practice sufficient number of questions. Very important. Once you have aggregate turnover with you, then we can identify whether this person is liable for registration or not. How do you identify that? You have to look at this table. Whichever study material you follow, you'll have this table. Okay, because there are these 4 states called Manipur, Mizoram, Nagaland, Tripura. These are special category states. And in those special category states, your threshold limit is not 20 lakhs, it is 10 lakhs. You have to by heart these states. Because when they ask for examination, they will not mention the turnover. They will only mention the state. Now, the other states, Arunachal Pradesh, Meghalaya, Sikkim, Uttarakhand, Puducherry, Telangana, the limit is 20 lakhs. Okay. All other states, okay, all other states, the turnover is going to be, the limit is going to be 40 lakhs if you are exclusively supplying goods. Okay. And 20 lakhs if you are supplying service. Goods plus service is also going to be 20 lakhs. Okay. So you have to study this limit very thoroughly. Okay. So if you have supplies from multiple, if you have supplies from any of these states, the aggregate turnover is to be computed, and after that, the threshold limit is to be considered based on which state you are in. What if you're making supply from multiple states? You have to take the lowest limit. Can we expect it in? Yes. They can ask you just, they have asked that for examination. They'll just ask you to compute aggregate turnover. Yes. There can be question for that as well. All right, fine. Now, what if you have supply from multiple states? If you have supply from multiple states, you have to understand that the threshold limit will be the lowest. If you have, let's say for example, you have supply from Tripura, Telangana and Kerala. Limit, and you're supplying only goods. Here it is 40, here it's 20, here it's 10. The effective threshold limit you will get is only going to be 10 lakhs, which will be the lowest. Got it? So first compute aggregate turnover, take all the turnover, take all the supplies and add it. And then when you look at the threshold limit, if you have supply from these three states, you will have to go to the lowest limit. Now there is another catch over here. What if in Tripura, you are having only exempt supply? Then you will not consider this limit. You will only look at these two limits, 20 and 40. Take whichever is lower of that. Okay. So if you are having supply from multiple states, you will effectively get only the lowest limit. But if you are making only exempt supply from that state, you need not consider that state's limit. You have to look at the other state's limit. I hope you can remember all this. Okay. This is just a revision. I hope you are getting everything back. Okay. All good. So this is a very important topic you have to thoroughly study. Okay. Practice sufficient number of questions computing aggregate turnover. Also practice sufficient number of questions where you look at whether this person is liable for registration or not. Make sure you practice that. All good. Okay. Now, continuing. Okay. The next point is the person not liable for registration. Now we're done with who is liable, who is not liable. If a person is exclusively engaged in exempt supply, he need not get registered. That actually makes sense. Let's say you are a person and your business is just supplying alcohol or petrol. Alcohol or petrol will not attract GST, right? So if you're exclusively dealing in that supply, you need not obtain registration. That's a very easy point to remember. Actually exempt supply. Okay. So that is section 23. Okay. 23 has some other notified supplies as well, but that you actually study with section 24. Okay. You study section 24. So what is section 24? Section 24 actually talks about compulsory registration. Section 24 talks about compulsory registration. Let's try to understand what do you mean by that. Okay. Certain entities are notified by government as the entities who should mandatorily get registered irrespective of turnover. So 22 talks about persons liable based on the aggregate turnover. 23 who need not get. 24 we are talking about people who should get registered even if their turnover does not cross the threshold limit. Who all are they? The first person is this point. A person making any interstate taxable supply. So if you are registered, if you are a person and if you are making a supply and it's interstate supply, you have to mandatorily get registered. Compulsory registration irrespective of turnover. But only if it is a taxable supply. So if you look at this question that we just did, the point number 2, it was transfer of exempt goods to his branch in Rajasthan. It's actually interstate supply. So actually, when I finished this answer, I did not say this person has to get mandatorily registered because he is in interstate supply. Why I did not say that? Because his interstate supply is exempted. That's the important point. So if you are a person making interstate supply, you have to get mandatorily registered only if you are making taxable supply. Important. Now, there are 2 exceptions to this rule. Important. Okay. So when we look at section 24, talking about compulsory registration. Okay, the first person is interstate. The person making interstate taxable supplies. But we have two exceptions. Okay, the first exception is notified handicraft goods. So if there is some notified handicraft goods and some goods for which you have to make it predominantly by hand, read the notification. So if these goods are being supplied by you as an interstate supply, registration is not mandatory. Then when should you get registered? Only when your turnover crosses threshold limit. Only when your turnover crosses threshold limit. Now, who is the next person? A person supplying services. So if you're a person supplying any service, even if you're supplying it interstate, registration is not mandatory. It's a very important point. Okay, you have to keep it in your mind. Okay, even if you're making a taxable service, if you're doing it interstate, registration is not mandatory. Then when should you get registered? Only if your turnover crosses threshold limit. So the first person, interstate taxable supply. I hope that's clear. So whichever study material you're following, just quickly read that. Done. So that's also done. Next. Okay, this point is an important point. It's basically CTP. Okay, casual taxable person. I want you to go and revise the definition of casual taxable person. Make sure you're thorough with that, who casual taxable person is. And if you're a CTP making taxable supply, registration is mandatory. So quickly just making it very easy for you, who is a casual taxable person? He's coming from some other state, and the current state he does not have a fixed place of business. Such a person is called casual taxable person. Should he get registered? Yes, mandatorily, irrespective of turnover, he has to get registered. Now, the CTP, the next point we have to learn is NRTP actually. NRTP making taxable supply. So these two entities, who is NRTP? NRTP is non-resident taxable person. He's coming from outside the country. So these two entities should get mandatorily registered. That's the provision. These two entities should get mandatorily registered irrespective of turnover. Don't look at turnover. Get registered. That's what the provision says. Okay. Only if you are making taxable supply. Keep that in your mind. Exempt supply need not get registered. Only for taxable supply. Okay. Now, for these two entities, they have a separate set of registration procedures under section 27. Please make sure you revise that. Okay, I'm just going to quickly run through the points. First of all, both of them mandate registration. Second point, both of them should apply at least 5 days before commencing business. Registration should be applied at least 5 days before commencing business. They should apply for registration. Now, both of them actually should give advance tax. Both of them should give advance tax, should pay advance tax to get registered. Both of them registration has a validity, that is 90 days. Can it be extended? Yes. For a further 90 days, they can be extended. Okay, fine. Then what if the casual taxable person is coming to a state, 90 happened, you extend further 90, again the program is continuing. What do? You can actually get normal registration. That's an easy point, remember, keep that in your mind. Okay, and then one more point, NRTP is a non-resident taxable person. It's coming from outside the country, right? So if you're coming from outside the country, you will not have a PAN. For obtaining registration, you need a PAN. So what does NRTP do? They will actually get registration based on their PAN. Sorry, based on their passport. They don't have a PAN, right? They will get it based on their passport. So all these points are given under section 27. Please make sure you study that, section 27. Okay. Now, in the CTP, you have an exception also. I told you CTP should get compulsory registered. We have an exception, and that is again those notified handicraft goods. Where a person supplying that need not get mandatory registered. Just read that. Okay, done. Now, next, who is a mandatory person? Yes, a person paying tax under reverse charge. Very important provision. Listen to me very carefully. Okay, let's say there's a person called A, there's a person called B. Okay. There's a person called A, there's a person called B. A is supplying something to B, and this supply, let us say, is under RCM. It's under RCM. We immediately know that B is supposed to pay GST. The provision says that B should get mandatorily registered, compulsory registration. Okay, the provision says that B should get compulsorily registered. All right. Now, this is important. Now the question is, what about A? Please keep in mind that if A is exclusively engaged in RCM transaction, no registration. Keep that in your mind. If A is exclusively engaged in RCM transaction, he need not get registered. Okay. What if he has other supply as well? He will have to, because RCM supply as well as the other supply is part of aggregate turnover. So if the aggregate turnover crosses 20, you will have to get registered. Important. Keep it in your mind. Okay. Fine. Next. Okay. Fifth point. A person deducting TDS under section 51. A person deducting TDS under section 51. Okay. Who is that? You have to study section 51, TDS deductor. So those persons should get mandatorily registered. Okay, even if they are already registered under GST, solely for the purpose of deducting TDS, they have to get a separate registration. That's what the provision says. Okay, fine. Next phase. 6th point, we are talking about principal agent. So basically, let's say we have a principal, we have an agent. Okay, so basically supply. Let's say this principal is a taxable person. Let's say principal is a taxable person. Okay, and let us say this supply is a taxable supply. Let's say the supply is a taxable supply. The provision says that he is a taxable person, supply is a taxable supply, then the agent should get compulsorily registered. Then the agent should get compulsorily registered. I hope that's also very easy for you to understand. Okay. So far we have read 1 till 6. Whichever study material you are following, just make sure you are following with me. Just read all this. Done. Next, let's continue. Okay, case 7 and case 8. Okay, just a moment. Case 7 and case 8, both are not important for your CA intermediate, so you need not study that. Now, actually, for the next couple of cases, I'm going to summarize into one simple chart, and that's basically we are talking about e-commerce operator. This is very easy to understand. See, if a supplier is supplying goods through e-commerce operator, okay, we have to see whether 9 subsection 5 is applicable or not. Why are we looking at that? Because if 9 subsection 5 is applicable, the person liable to pay GST is the e-commerce operator. They should be mandatorily registered. Okay. What if 9.5 is not applicable? If 9.5 is not applicable, section 52 is going to be applicable. What is section 52? TCS. For that, you have to be again mandatorily registered. If you think about it, almost all e-commerce operators will have to mandatorily get registered because they're going to be either covered under 9.5 or other cases. They have to get registered. All good. Now, so eco is done. What about the supplier supplying through e-commerce operator? First point is, are you covered under 9.5? If you are under 9.5, eco pays a tax, right? You need not get registered. If you're under 9.5, eco will pay the tax. You need not get registered. Okay. What if it's other cases? Other cases means it's not 9.5. If it's not 9.5, you're looking at whether you are a supplier of goods or a supplier of service. If you're a supplier of good, for example, you're a person supplying goods through Amazon or Flipkart, such e-commerce operator, you have to mandatorily get registered. If you're a service provider, you have a threshold limit of 20 lakhs, 10 lakhs. Again, I hope that this is not the first time you're studying this, because first time you have to have a thorough understanding regarding all this. As a quick revision, this is fine. So supplier, eco. Okay. Eco is counter 9.5, get registered. Eco is not under 9.5, still get registered because 52 will be applicable. What about the supplier supplying through eco? Is 9.5 applicable? Need not take. 9.5 not applicable. You have to get registered if you are a supplier of goods. If you are a supplier of service, then you have a threshold limit of 20 lakh or 10 lakh depending upon the state. Now, even though they say that for goods registration is mandatory, see, registration is mandatory, still there's an exception to this. Okay, you have to read it in your material. Like, government has given some conditions. If those conditions are cumulatively satisfied, even though you are a person supplying goods, you need not get mandatorily registered. Okay, your previous year turnover and current year turnover should be less than threshold limit. Okay, and you have to verify your PAN. Your PAN status you have to verify. You'll get an enrollment number. All right, then you should not be doing this activity in 2 different states, only in 1 state. You should not engage in interstate supply, etc., etc., etc. There are some conditions to be satisfied. If those conditions are satisfied, yes, you can actually make the supply through e-commerce operator without getting registered. Just look at that. Just keep that in your mind. Okay, done. So that's all about compulsory registration. Okay, compulsory registration. Now, I want you to do one question. Just try doing this question number 9. Okay. So Q Limited is engaged exclusively in supply of taxable goods in the following states. In the matter of states, Madhya Pradesh, Gujarat, Tripura. Okay, fine. So, and they're asking you whether this person is liable for registration. But goods sorry, as it's just goods, sorry, I shifted to Malayalam. As it's just goods, the first thing you have to do is compute the aggregate turnover. Okay, so you take 5 plus 14 plus 12, you get 31 lakhs. Okay, now the question is, what is the threshold limit? Okay, so as we discussed, Madhya Pradesh, Gujarat, Tripura. Tripura, it is 10 lakhs. Here about it's 40 lakhs. Okay, so what happens? This person, yes, this person has to get registered because the 10 lakh will be the applicable limit. Okay, now there is one more question. Will your answer be different if Q Limited supplies only petrol and diesel from Tripura? What happens if you're supplying only petrol and diesel from Tripura? If you're supplying only petrol and diesel from Tripura, petrol and diesel both are exempt supply. If you are exclusively supplying exempt supply, remember what I told you. The threshold limit will not come down. You need not consider that state's limit, which means forget this limit. Only look at these two limits. 40, 40. Take the lower limit, 40. Did the threshold aggregate turnover cross limit? No. This person is not liable. So the first case he will be liable. Second case he will be not liable. I hope that's clear. Okay, fairly easy. Now look at this question again. We already discussed this question and we came to a decision that this person has to get registered. Now you should understand why it is this point. Fifth point. He's getting inward RCM supply. You have to mandatorily get registered. Okay. So I hope you have a clear idea about section 24 and 22, 23 and 24. I hope this was a really good quick revision for you guys to revise 22, 23, 24. Again, I've already given disclaimer to you, assuming that you already have studied this once. Okay, this should not be the first class where you're coming and listening to this. No, because again, the usual story I tell you, this is not how you study registration chapter. First, you have to look at aggregate turnover. Practice n number of questions aggregate turnover. Have a clear idea. Each and every transaction, how it will impact aggregate turnover. Then you look at persons liable. You look at each state separately. Understand that thoroughly. Then you go multiple states. Okay, so this is how we usually discuss in class. Here I just gave it to you in one shot. Okay, all good. Next, I'm going to selectively select some part from section 25. That is procedure for registration, and I'll tell you what all things we'll be discussing here. Okay, fine. Let's see. Okay, this is an important point I wanted to study. This point. Okay, if you're a person and you're becoming liable for registration, you have to apply for registration within 30 days. An important point. Apply within 30 days. Okay. And if you're a casual taxable person or an NRTP, at least 5 days prior. At least 5 days prior, you have to apply for registration. Just keep that in your mind. Okay, done. So this is something I've already taught you. Done. Then there's one more important thing. If you are applying for registration within 30 days and you're getting registered, your effective date of registration will be the day you actually became liable. You understand the point? For example, let's say you are a person, you became liable for registration. You have to apply within how many days? 30 days. To apply within 30 days. If you apply for registration within 30 days, your effective date of registration will be the day you became liable. What if you are applying after 30 days? Your effective date will be whenever you get registered. You got the idea? Okay, so this part is important. Keep that in your mind. Next. Okay, while you're obtaining a registration, please just have a brief idea of registration procedures, like when to apply, okay, when you are supposed to apply for registration, all those points, just keep that in your mind. Okay, like there's a form called REG01 for application. So all those things not very important for exam, but just have a quick revision. Okay, next, this Aadhaar authentication is an important topic. Aadhaar authentication. Okay, in that, first of all, we have an idea how do you authenticate under Aadhaar. Then you have to study this particular point. For example, for who all Aadhaar authentication is not applicable. Make sure you study that. For who all Aadhaar authentication is not applicable. Okay, fine. You have to also study this Aadhaar authentication. What are the consequences of not doing that? For example, if you are applying for registration and you are not doing Aadhaar authentication, you will not get registration within 7 days. It will take more days. Make sure you study all those portions. Okay, it will take 30 days. Okay, if you're already registered person, if you're not doing Aadhaar authentication, again you have some consequences. Okay, you will not get refund, you will not get revocation of cancellation. All those things I want you to revise. Okay, keep that in your mind. Now, this is a very important rule. Please study this. Rule 10A. Impact in multiple chapters. Okay, if you're a person applying for registration, you should provide bank account details. If at all you do not have bank account details, it is okay. You can actually still apply for registration without bank account details. But once you get registered, try to give bank account details at least within 30 days. Keep that in your mind. That's also an important topic. Okay, fine. Okay, then I already talked about section 27. Okay, CTP and RTP. Then again, section 28. Make sure you study section 28 as well. Okay, what is 28? 28 is amendment of registration. So basically that entire process is divided into two. Basically there are some core field and non-core field. All the core field, if it changes, you have to get department's permission for amending. Which is the core field? Name of the business, increase or decrease of stakeholders, additional place of business, principal place of business. If these things changes, please go amend your registration. But before amending, you need department's permission. But if any other information is amended, for example, your mobile number, email ID, etc. is amended, you need not have government's permission. You can just go and amend it. Okay, so make sure you study that. Then when you go to cancellation of registration, make sure you study these provisions. Okay, what are the reasons by which department might cancel registration? This is actually important. They have asked this multiple times for exam. What are the reasons by which department might cancel your registration? Okay, make sure you have a thorough understanding of this as well. Okay, I'm not going it one by one. I'm just reminding you study this. After this, you have to study revocation of cancellation. Once cancellation is done, next you have to focus on revocation of cancellation. All right. Good. Okay, so now if you look over here, in this marathon, I have covered the revisions of, okay, supply is completely covered, exemption is covered, charge is covered, value is covered, time is covered, place is covered. Along with this, I have also covered ITC and registration. Okay, so these were the topics that I had actually planned for your marathon in the last 2 days. And if you're looking at mark weightage as well, these are the topics which have the maximum mark weightage. Okay, now if I'm going to dwelling on to the other chapters, that's again going to take an extended time. I hope this topics you have had a really good revision. This was my plan for marathon, covering these many topics. I hope you have had a thorough understanding of this. And somebody have asked me for a combustion scheme. The issue with combustion scheme is, first of all, combustion scheme, even though government has bought it as an easy scheme, it's not an easy scheme to revise. Okay, so if you have not already thoroughly studied combustion scheme, it's not going to be a quick revision. You'll have to have a detailed understanding because there is impact of aggregate turnover, there's impact of turnover and state. Okay, so you should have a better deep planning, better deep understanding. So it's not going to be easy to take a quick point over that. Okay, All right. So yeah, I think you're talking about composition scheme. You're saying that you want an overall idea regarding the scheme. All right, fine. So I'll just take maybe 5 or 10 minutes more and I'll give you a quick summary of combustion scheme as well. It's not part of my plan. I was planning to wrap up the session, but okay, let me give you a very quick summary of combustion scheme as well. Okay, fine. So basically I'll be giving an idea of combustion scheme. At the same time, I'll also be giving you extra points that you're supposed to study in the scheme. So you'll have a clear idea. Okay. Combustion scheme, basically we can divide the entire chapter into two. Okay, just a second. Okay, combustion scheme, the entire chapter can be divided into two. Combustion scheme under 10 subsection 1 and combustion scheme under 10 subsection 2a. 10.1 and 10.2a. Okay, what are these two sections? 10.1 talks about combustion scheme for goods. 10.2a talks about combustion scheme for service. Okay, 10.1 talks about service. Now, even though we call it goods, two types of suppliers can opt 10.1. Two types of suppliers. Who all are they? Basically, if you are a person who deals with goods and restaurant service. Okay, only these two suppliers can opt for combustion scheme under 10.1. Okay, what are the criteria? Your previous year aggregate turnover should be less than or equal to 1.5 crores. That is condition number 1. The main condition, your previous aggregate turnover should be less than or equal to 1.5 crore. Second point is your current year aggregate turnover should also be less than or equal to 1.5 crores. Simply put, if your current year aggregate turnover is exceeding 1.5 crores, you'll have to exit from the scheme. Got the idea? Okay, that's about previous year aggregate turnover and current year turnover. Now, what are the benefits of the scheme? You have very nominal tax rate. What do you mean by nominal tax rate? For example, if you're a person dealing with goods, you have to pay only 1% GST. If you're a person dealing with restaurant service, you have to pay GST of only 5%. That's 2.5 GST, 2.5 SGST. Okay, now, when we talked about aggregate turnover, we discussed that the threshold limit is 1.5 crores. But if you're going to special category states, the limit is going to be 75 lakhs. The previous aggregate turnover should be less than or equal to 75 lakhs for you to opt the scheme. Okay, so that's also clear, easy to understand. Now, I told you your previous year aggregate turnover should be less than or equal to 1.5 crores, right? When you're computing that aggregate turnover, please ensure that you exclude interest income. Okay, again, as you guys requested, I'm just giving a quick revision of combustion scheme. If you're studying it for the first time, this session is not at all going to help you. Because as I told you, it looks like a very easy scheme. But there are a lot of intricate nuances in that actually is quite tricky. I'm just going in a one-shot way where you can quickly revise the topic. Okay, so coming back, aggregate turnover should not include interest income. But it will include the turnover from 1st April till the date you become registered. This should be included. So those who have already studied will understand what I'm talking about. If this is the first time you're hearing this, you will not understand what I'm talking about. Okay. So aggregate turnover excludes interest income, includes all the turnover from 1st April till you become liable for registration. Now, when you're paying the tax of 1% and 5%, how do you pay it? If you are a manufacturer, you pay 1% of turnover in state. So how do you compute turnover in state? Exactly like how you would compute aggregate turnover, but applicable only for a specific state. Exactly like how you compute aggregate turnover, but only for a specific state. Okay, fine. Now, what if you are a trader? If you are a trader, be careful. This has been tested for examination. It will be 1% of taxable supplies. It will be 1% of taxable supplies. Okay. What about you're a person providing a restaurant service? 5% of turnover in state. 5% of turnover in state. So far what will we discuss? Your previous aggregate turnover should be less than or equal to 1.5 crores. Current turnover should also be less than or equal to 1.5 crores. You should be a person supplying either goods or restaurant services. Okay. In special category state, it will be 75 lakhs. Okay. Aggregate turnover computation, there is slight adjustment. Please make sure you understand that. When you're paying GST, if you are a person supplying goods and you're a manufacturer, it will be 1% of turnover in state. Trader 1% of taxable supplies. Okay, now restaurant 5% of turnover in state. When you're computing this turnover in state, again be careful, because turnover in state excludes interest income, and interestingly it also excludes turnover from 1st April till you become registered. This turnover you include in the aggregate turnover, but in turnover in state you will exclude it. All good? Okay, fine. So these are the basic concept. Now, basically we discussed a person under a combustion scheme. He can make only 2 types of supply. One is goods, the next one is restaurant service. What if he would like to supply any other service? What will he do? For supplying any other service, there is another condition. Okay, it's called marginal supply of service, which means if your previous year aggregate, let me just explain one by one, which means in current year, you can actually provide services up to a limit. What is that limit? That limit is 10% of turnover in state of previous year or 5 lakh, whichever is higher. This is also important. Marginal supply of service. So which means that you can still provide services other than restaurant service, but this is going to be your limit. Okay. So these are the basic concepts you have to understand about combustion scheme of goods. Now, if you are opting combustion scheme, you have 2 major disadvantages. You cannot claim ITC. You cannot collect GST from the customer. You cannot claim ITC. You cannot claim GST from the customer. Now, this is combustion scheme for goods. There is a completely different scheme called combustion scheme for service. The question is, who can opt this? If your previous year aggregate turnover is less than or equal to 50 lakhs and you cannot opt 10(1), the other scheme. Okay, you are a person who is supplying some kind of supply, good or service. You cannot opt 10(1). You can actually opt for 10(2)(a). All right, you can opt 10(2)(a). What's the limit? 50 lakhs. Now, if you opt for the scheme, what is the rate of tax you pay? 6%. That is CGST 3%, SGST 3%. That's what you pay. This is combustion scheme for service. Okay. Now, this 6% or 3%, whatever it is, on which amount do you apply this? You apply this on your turnover in state. You apply this on your turnover in state. Okay, this is your combustion scheme for services. Now, there are certain people who cannot opt any of these schemes. There are certain people who cannot opt any of these schemes. Okay, who all are they? For example, if you are a person engaged in interstate supply, you cannot opt for combustion scheme at all. Interstate supply. Okay, if you are a person engaged in manufacture of some notified goods, engaged in manufacture of notified goods, make sure you study those notified goods. It's ice cream, pan masala, tobacco, aerated water, and some building material. Fly ash, bricks of fossil meals, okay, roofing tiles, building bricks, etc. 8 items. If you're a manufacturer of those 8 items, you cannot opt both the schemes. Keep that in your mind. If you're an NRTP, CTP, you cannot opt. If you're a person supply through e-commerce operator, you cannot opt. If a person supplying through e-commerce operator, you cannot opt combustion scheme. But there's an exception for that. Persons who are supplying goods. Personal supply goods can still opt, but there are some additional conditions. You should not be engaged in interstate supply. Same drama that we saw in the previous chapter. Make sure you look at that. Okay, these are the basic concepts for the chapter composition scheme. How they usually ask is they will ask you to compute the GST payable under composition scheme. They can ask for that. GST payable under composition scheme. Then the other thing that they can ask is asking whether a person is eligible for composition scheme. That's a very common question. Okay, if at all this person is eligible, which scheme? The different schemes, right? Composition scheme for goods, composition scheme for service, which scheme? All these questions can be expected. So I hope that was a quick summary for you guys to quickly revise this chapter called composition scheme. At least you will have an idea where to look at, what to look at right now. All right. Fine. I hope that is good. And one more tip, let me give it to you. There's a chapter called GST in India, the first chapter. Okay, not a very important chapter from examination viewpoint. You can have a reasonable level of study, but there's a chapter called payment of tax. A very easy chapter to learn. Okay, but make sure you thoroughly study that chapter. Okay, that's going to be very, very important. Oh yeah, sure. Good to know. All right. So I hope 2 days session, I could not cover 100%, of course, because usually my full-time class is like for 15 days. So I cannot cram up the entire thing into 2 days, but I hope the last 2 days was helpful for you because we covered so much of important chapters in the class. Right. So if you look over here, this is like a major chunk of topics you have to cover. We have quickly covered the revision of all these topics. I hope this session was really helpful for you guys. All right. Now again, I'll be giving a separate video on that. Don't worry. Okay. When you're studying, make sure that you practice sufficient number of questions. Okay. From each chapter, make sure you write down the answers. Do not read the answers. Reading will never help you in exam hall. Make sure you write down the answers. Okay. And write and practice. And as the exams are nearing, now it's August. It's very near. Make sure you're already revising where you're actually writing mock exams. You're writing mock exams. When you're writing the mock exam, make sure that you are keeping a timer and write the exam based on the timer. Don't just randomly go and write a mock exam. You should do it based on the timer. All right, fine. So if you have, just continue preparing. If you have any doubts in the indirect tax, you can directly contact me. It does not matter whether you are previously my student or not. You can directly contact me. Okay. Okay, fine. So yes, with that, I am wrapping up this session. Thank you all of you for attending. If you're attending this online class, if you're attending this live streaming, thank you for that. And now you can come back and always look at the recording whenever you have doubt regarding any of the sessions. All right. Okay. So I'm wrapping up for the day. Thank you.